here to help.
What are you looking for?
Simply send
What's
us a
your
video
budget?
where you explain your idea. Make it clear, concise, and compelling.
So instead of you trying to
Hook
search,
us in with your
people are
passion
trying to
and
help you,
vision.
trying to make it easier.
Don't forget to
I'm
include your
curious too,
contact
with regards
details
to
so
physical
investors can
stores
reach
and the
out
idea of a
directly.
lot of these physical stores trying to find
This
ways
is
to
your
get people
chance to
back
shine
in.
and get your
We were
idea
just
in front of
checking
people
in
who
with
can make
Macy's
it a
in
reality.
Herald Square here in New York, which of
Imagine
course just
turning
really
your
decks out the
startup
store.
dream into a
You go
thriving
to that store
business.
just to see the displays.
It all
hopefully you
starts
buy
with that
something
one
along the
simple
way.
step.
I know Bloomingdale's right
So
across
what
from
are you
Bloomberg
waiting for?
headquarters here also has these pretty
Grab your
expansive
phone,
displays. Are we
hit
seeing these
record,
stores
and
embrace
let your
that more?
idea
Because there
fly.
have been some stores that said they're actually pulling
The
back.
future
Saks
of
said
your
they're not doing
startup
their
could
normal
be
light
just
shows.
one video away.
Yeah, you know, stores
Remember,
are back this year, which
be
is
clear,
fantastic.
be
You
passionate,
heard that stat
and most
that
importantly,
there's
be
a bunch
you.
of folks that are going to be
We can't wait
shopping
to see what
stores
you've
this year.
got.
And so there is
Let's get
that
funded now.
retail shopping fun where you get together with your friends and you go to the stores. It's not so much about the decorations as much as it is about that feeling on Black Friday or Cyber Monday, going in and going shopping. I think the key for retailers this year is going to be all about, again, curation, recommendation, and then let's not forget the store staff. Frontline workers have been really part of the equation. I always say you can have the best discount, the best promotions, the best curation, the best assortment, but if that person behind the till is not in a good mood, it could really, really change your opinion of that retailer.
Amen.
So frontline workers is also something that retailers are taking care of this year.
Yeah, it's a great point that service matters. I want to go to another line in your note because I thought this was interesting, that retailers are focusing on inspirational content, which actually can improve sales according to your data. What is inspirational content, though?
Well, listen, I talked a little bit about AI, and AI has been used a lot of times with figuring out, again, your assortment, figuring out how best to make sure that the supply is right, also how to get it to the store. And then, of course, you're using all sorts of AI for doing curation around your ads and your promotions. But now, because of advanced technology, now the way that you advertise is also being inspirational. So you can have more tailored advertising to consumers now, which is fantastic, a lot because of Gen AI. So that's what I mean by inspirational. And also gift ideas, suggestions, recommendations, that's on the pitch this year. It's the year of curation. You know, I always like to say, where do people get their inspiration? Do they get it from, you know, looking at Instagram? Do they get it from going on the website of the retailer? Most retailers are saying, listen, I've got to play a big role of making sure that eyeballs come to my website. How do I get them there? Maybe I do have some ads on Instagram to get you to click through to come to my website.
Absolutely, all about tantalizing folks. Jill Standish over at Accenture Global, the head of retail there. A closer look here at the holiday shopping season, which ostensibly kicks off today here on Black Friday. But quite frankly, it kicked off days, if not weeks ago. Just not too long ago, Scarlett Fu, a co-anchor of mine, had a chance to catch up with the CEO of Bloomingdale's, Olivier Braun, about the holiday season and the future of the department store model.
The models in Asia and Europe right now are really flagship focused. So I think that's one big difference. And honestly, I think the flagships will have a bright future in the next 10, 20 years. It's not, I think, a problem at all. I think the problem here is managing such a large footprint. And that can be a challenge sometimes. At Bloomingdale's, we have the chance to be in prime locations and prime malls, so very strong locations. We have a limited footprint. So I think we have more opportunities than threats for Bloomingdale's in the future. I really do think that actually the department store model has a bright future, but it has to reinvent itself from the perspective of the customer, but also from our brand partners. We have to be relevant for our brand partners and rethink the model from this point of view.
How about the broader retail landscape overall? Are there too many stores in the U.S. overall?
When you look at just the pure market data, when you look at the overall market is actually slightly growing. The penetration of online is going up. So for sure, the average productivity of the square feet overall in the US is actually slightly decreasing. So yes, there will be probably some losers. It's why you have to challenge yourself and reinvent your model to remain relevant for your customers, but also for your partners.
I have to ask you, when you look at other retailers, and it doesn't necessarily have to be a direct competitor, who do you envy most? Like when you walk into their stores or you shop on their website, who do you just say, wow, they really got it right. I want to try to emulate some of this.
No, First, I really think that actually Bloomingdale's is doing that right. When I discovered the model, I'm sorry to say, but I'd say, no, but it's not the only, it won't be my only answer. But actually, you know, honestly, I was very surprised by the level of engagement of the customer. The relationship that we're building with the customer and with our partners is actually good. And I think we can even do better in the future. But I think there's a lot of source of inspirations from our competitors, but also from other models right now, whether it's in terms of service, in terms of brand mix, in terms of events and activations. There are a lot of inspirations that are in retail and beyond retail. I don't want to give you any names, but I have a lot of source of inspiration actually in the US, but also abroad, which is another thing. I think we should not be too domestic focused because we're going to miss probably some good trends that are happening somewhere in the world.
And you think that maybe what we see abroad in terms of their approach to department stores and just retail overall, you think that's going to be palatable to a U.S. audience?
I'm absolutely convinced about that. I think, you know, we have to bring the best of both worlds, and I think this is where we're going to perform and bring something different for the customer. The customer is ready right now for something different, more inspiring, and this, we can get it from some of the countries or some of the other models in the world.
And that was part of my conversation I had with Bloomingdale's CEO, Olivier Braun, just a little while ago. And if you notice all that green behind him, we filmed that right at the start of this big promotion they had with Wicked.
Yeah.
And I actually got to go. They had this big opening night where they had the stars of Wicked, Cynthia Erivo. I got to, like, I grabbed her little finger and I said, it's going to be okay. And she sung to me. It was very beautiful. Yeah.
That was the start of their promotion of Wicked, Bloomingdale's. But the Wicked promotion has been going on forever.
Yes.
Have you seen the movie?
I have not, but I kind of feel like with all the advertising, I sort of feel like I've seen it, whether I wanted to or not. Are you going to go see this movie?
I'm going to go see it.
Yeah.
I see a lot of clips on TikTok, so I feel like I've already watched the entire movie.
Well, there's two parts to it.
Yeah.
So I'm just going to wait till the second one comes out and then watch them together.
Just going to binge it all at once. That's not a bad plan.
I don't want to be lost.
I feel like I have to watch it, though.
Yeah.
I mean, I'm also a huge
And I'm
Ariana
confused because
Grande
I've never
fan.
seen the play. So is this, it's the Wizard of Oz, but not, or what?
It's in the same universe.
It's like the origin story? It's like the prequel?
Exactly.
So this is like when we found out like Anakin was Darth Vader or something like that?
You know, I'm not a huge Star Wars buff, so I can't really
comment.
comment
Is that Star Wars
on
or Star Trek? I don't know. Once I made a Star Wars joke and I got it wrong, and like every geek in the world sent me an instant message saying, no, that's the Millennium Falcon. I was like, I don't care.
I don't even play in that sandbox.
By the way, Damian Sassower writing in. Remember him, friend of the show?
Damo.
He says, Demolition Man, underrated.
Really? I
Says one of the best performances by Wesley Snipes. And if you can't trust Damian Sassower for your movie reviews, who can you?
I got a tweet to that effect, and I would trust anyone on the internet. So put that on your viewing list. Demolition Man. But don't go anywhere, because coming up, drivers getting some relief from higher gas prices. We'll speak with Linnea Geis. She is retail analyst, chief operating officer over at PDI Technologies. That conversation up next. This is Bloomberg Surveillance.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
We need a clap.
Go.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
All right, welcome back to Bloomberg Surveillance. Let's get a quick check on these markets right now. Still green on the screen. Again, I don't know how much volume there could possibly be, but the S&P 500 higher by about 0.2%. We were a little bit higher a little bit while ago, but still, it still counts. Then you take a look at the Euro USD, pretty much unchanged on the day, hanging out at around 105. These are all assets that I rarely look at on open interest.
I don't understand why you're poo-pooing the S&P futures. 60.2725. That's going to be a record high if that holds into the cash session.
That's true, and if these gains hold, it could flip this into the best month of the year, but you don't get out of bed for, what, less than 18% of a discount? This doesn't quite thrill me.
But I like this. You know, we've been talking a lot about this on the close, these incremental moves in the market, and sometimes that's healthy when you have that rally. Rather than just get a rip-roaring, 2-3% a day, sometimes it's these fractional gains that matter most, Katie.
See, you're a good anchor because you sell the
I
small
am the good
moves,
anchor.
but,
It's like good witch, bad witch. Isn't that the plot of Wicked? Good anchor, bad anchor?
Yeah, so you're
How would that
Glinda,
sequel do?
and I'm Elphaba.
I don't know what that means, but okay.
In any
Should I
case,
grab your finger?
Please don't. We'd have to reach pretty far. Let's talk about gas, because AAA expecting record-setting travel numbers this week. The agency estimating nearly 80 million people are traveling 50 miles or more for Thanksgiving. And joining us now is Leanna Gase. She is convenience retail analyst and COO of PDI Technologies, joining us now. Great to have you with us. And taking a look at some of the notes that you sent over, you write that this is the cheapest Thanksgiving holiday for gas prices since 2020, which I think would surprise a lot of people. So walk us through what actually got us to these levels.
Well, it really is. Consumers are experiencing, like you said, the cheapest gas price. And so that is good news for everyone who's hitting the road. 72% of our gas buddies have said that they're traveling. So that tracks with the national statistics. And honestly, some of it's really just driven by overall economic slowdown and demand factors. So the consumers out there are still a little bit skittish, and the convenience retail operators are looking to entice the consumers to come into their stores. And that more competitive environment is driving down prices for everybody.
Is there a sort of still a benefit to trying to shop for cheaper gas prices? I remember like for years, my uncle Ed, who's probably watching, good morning Ed, he lives like right on the border of Illinois, Indiana, and he always goes across the border to Indiana, to get, his gas and, other illicit things, and then drives back across the border. Is that still a thing?
Oh, absolutely. Competitive gas price shopping is a huge trend. Actually, it's a big gamification. You can find deal shoppers on the internet really telling you where to find the cheapest gas. And you nailed it, actually. Your uncle's quite smart. The gas taxes differ from state to state. So sometimes when you're looking to be on the road, you want to make sure that you do your research in advance and try and understand whether or not you will find a better discount by crossing the border.
See, I push it to the very limit till I have like 10 miles left, and then I just have to accept any price I can get. yet, so I need to take a page
You're a
out
price
of...
taker.
Exactly. I need to learn from your uncle there. But let's talk a little bit about what could happen next year. Of course, there's a lot of consternation over potential tariffs on Mexico, on Canada, too. I mean, what could the impact on the gas picture be coming into 2025?
Well, I think there's still so much uncertainty, and as you know, many things are interconnected. But we do import a significant amount of crude from Canada, and so that impact certainly would be felt by any part of the supply chain that experiences that impact. And so we've modeled internally here that roughly a 25% tariff could increase prices as much as 30 to 70 cents per gallon, particularly up in the Great Lakes and the Midwest region, and then feeling that even still a little bit down into the Rust Belt.
All right, Linnea, great perspective. Appreciate your time. That is Linnea Geis of PDI Technologies. Thank you so much. And somehow it's been 2 hours, Romaine. Can you believe it?
It's been 2 hours, and somehow we've made it this far without actually falling asleep or anything. I don't know how Farrow, Abramowitz, and Horton actually do this every morning. Did they actually wake up every morning at like 2, 3 in the morning and come in and do this?
They must be constantly jet-lagged. This is like European.
I don't know. I don't think Farrow ever leaves the office.
No.
Abramowitz, I see her. She actually lives near me.
Yeah.
I kind of avoid eye contact with her when I see her on the street, as you normally do when you see your coworkers out in the wild. But
I'm not sure where
she's a nice person.
lives, but it must be somewhere chic because she has the outfit to go with it.
She always has those fancy shoes on.
I know.
I don't know. Are those good for walking around New York City?
I think you have to be careful, but I don't know. Whitney Tilson wants to clean it up. In any case, don't go anywhere. We have a great final hour coming up. Michael Green, he is Chief Strategist at Simplify. He'll join us along with Eric Fish of HSBC, and we're rounding it out with Christina Hooper of Invesco.
Hey, happy birthday, Russell Wilson.
All right, Russell Wilson.
Pride of Cincinnati.
Yeah, thanks for tuning in. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you were the first woman, as I understand it, first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I played drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Well, I think the real question is, does the buying continue, right? So we've seen extraordinary inflows into products like BlackRock's Bitcoin ETF. We've seen an incredible innovation, in quotes, right, the classic financial innovation with the single stock ETFs that have powered entities like MicroStrategy over the past month or so. Those seem to be running out of gas, and the financing costs associated with them, I think, kind of give lie to this idea that financial conditions are affected in any way, shape, or form by what the Federal Reserve is doing right now. But this is clearly one of these things that is indicative of both people's expectations that the craziness is only kind of going to accelerate as it relates to government spending or inflation or the risks associated with the Trump administration.
And as people sort of take a look at that, Michael, and they try to sort of make bets in the crypto sphere, we've seen a lot of people looking for proxies to do that. MicroStrategy, of course, was the proxy for quite some time. We started to see ETFs come into this space, and we've started to see more of an embrace, not only by retail investors, but by the institutional set as well. Do you expect that to continue? Do you expect the embrace of crypto to be much more through these proxy vehicles rather than through the actual crypto asset itself?
Well, I think this actually tells you something about the space, right? Which is that there still is very little utility associated with the actual tokens themselves. Ultimately, this idea of digitally native securities is incredibly important. It really is an incredible innovation to think about changing away from our still paper-based financial system to one that's really built around digitization and securities that are capable of having complex instruction sets embedded inside them. But right now, we're basically just trying to build enthusiasm for the space. And that is clearly being driven by promotional activity. We see that across the space, everywhere from BlackRock on down to the extremes of the Michael Saylors.
Well, let's talk a little bit about these MicroStrategy single stock leverage ETFs. I want to jump right into the weeds here because as reported by Bloomberg's Vildana Heinrich, you're seeing this really interesting dynamic where they can't get their exposure through swaps anymore. They have to basically tap the options market and buy these call options. And there's been a lot of concern about that, but I want to ask why? What is the end effect on the end client, or is this more a problem for the issuers?
So there's two separate components associated with it. One is it is clearly an issue for the issuers themselves in that their prospectuses do not disclose the use of options. And so by attempting to maintain their investment mandate, moving away from swaps into options, they are incurring costs in pursuing their investment strategies that are not fully disclosed to their investors. That potentially creates liability at some point in the future should these begin to underperform. By my calculations, the financing costs are somewhere in the range of 5 to 10% per month at this point. So while we sit here debating the idea, should the Fed cut by 25 basis points, we're seeing areas of the market that are being propelled by speculation with interest rates closer to 100%. So it really is not anything to do with the Fed at this point, I would argue. The second issue that you have is that financing cost, because it ultimately means that these vehicles are facing a bleed associated with a failure of those options to go further into the money or deliver against their volatility. That means that the carrying costs of these products are also in that kind of 5% plus 10% area, meaning that the Bitcoin market and the MicroStrategy market has to continue to rise at nearly 100% a year in order for these products to break even. That's a very, that is an incredible headwind, and a lot of the behavior that we're seeing in these single stock levered ETFs, I think ultimately we're going to find out will be treated as various forms of manipulation, and in all likelihood, we'll see this stuff pulled off the market at some point in the future.
Well, we'll see. That would certainly be dramatic. But to put it Simply, of course, these are not meant to be buy and hold investments. The issuers themselves would tell you that. But I want to talk too about the relationship between these leveraged single stock MicroStrategy ETFs and what it means for the actual MicroStrategy underlying stock. Because you see MicroStrategy trading at a record premium, I believe, to Bitcoin itself. And there's some theories out there that it's actually these leveraged single stock vehicles that are driving that.
Yeah, I don't think there's any question about that. If you look at the increase in premium that occurred, it happened almost simultaneously with the launch of the largest of these levered ETFs, MSTU being the ticker there. That actually very clearly powered this separation. There's very little to actually debate around that that's allowed it to push itself beyond Bitcoin. Now, what that's created is something similar to what happened with Grayscale Bitcoin Trust a year ago, or 2 years ago, in which a premium that it developed for Grayscale Bitcoin Trust created demand for Bitcoin. This is working almost in reverse. The premium for MicroStrategy is leading to MicroStrategy being able to issue shares and in turn buy Bitcoin. It's a far less direct route, but it's the same underlying effect that continues to power both the stock and the coin, the token, higher at this point.
And just real quickly, Michael, I am curious that when we start to, we're talking about this in the context specifically within the crypto sphere, does some of that optimism, does that bleed out into the broader market? I mean, can we take cues from what's going on in the crypto sphere for the rest of the market?
I think it's hard not to assume that there are going to be implications associated with this, right? So you have individuals who are investors in Bitcoin who are feeling flush in the environment that will lead to them increasing their purchasing activity, et cetera. So there are real world feedbacks to this. There's also very real world feedbacks in the kind of the classic George Soros reflexivity component. This type of price activity facilitates MicroStrategy going out and raising real cash in the form of convertible debt, or issuance of shares, which in turn is used to purchase that Bitcoin.
Yeah.
They could theoretically hold on to that cash and use it for alternative corporate purchases, as we saw with stocks like GameStop or with AMC Entertainment. So far, Saylor seems to be much more aggressive in this process.
All right, Michael, great stuff. Going to leave it there. Have a wonderful rest of your week and weekend. Michael Green over at Simplify Asset Management here on this Black Friday. When we come back, we are going to focus a little bit more on what's been going on with lines of shoppers outside the stores and the retail trends. But I think, Katie, we have to take a moment here to pour one out for a trailblazer when it comes to sartorial elegance. We just
Are we talking about a person?
Well, even better.
Yeah.
We're talking about a Shiba Inu. Bodhi, the menswear dog. You may not recognize his name, but you've definitely seen his face. This was a dog that came to fame back in 2013 when its owner just decided to dress him up in a bunch of Ralph Lauren samples. And of course, this just took off. This is a real dog in real clothes. And he looks better than both of us here. He could be hosting this show. Unfortunately, he passed away, but he was at the ripe old age of 15, which for a dog, that's a good run.
Yeah, that is pretty impressive.
Yeah.
I do wonder what happens to the account now. Does it just live on, but
I don't know. Maybe
without any new content?
Maybe there'll be a Bodhi 2.0. I don't know, but I just think about him and I think this is this time of year, right? He would be out there looking for those 40% off sales, those cashmere sweaters at Banana Republic or
Bodhi
whatever.
the dog couldn't hang on for one last Black Friday. It's a really sad story, but I think I finally found a use case for AI. And it's creating images of this now deceased dog.
All right, love them. Pour one out for Bodhi here on this Black Friday. We are going to talk about some of those retail trends when we come back here on Bloomberg Surveillance. Eric Fish over at HSBC. He's stopping by the big program. Stick with us. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
And Bloomberg surveillance rolls on even as John, Anne Marie, and Lisa decided not to come to work. So I have your morning calls for the day. First up, D.A. Davidson raising its price target on Planet Fitness. $87 a share, a neutral rating to analysts, pointing to membership growth and a monthly fee increase. Those shares fractionally higher here in the pre-market session. Next up, Citi raising its price target on Ulta Beauty to $390 a share. This on the stock's balanced risk-reward. The shares, though, unchanged here in light trading on Black Friday. And finally, Morgan Stanley lowering its price target on Kohl's to $13. The analyst saying current strategies may have actually impaired the business further.
You hate to see that. If
Yeah.
you're current management, that one's got to hurt.
Yeah, and Kohl's, those shares been under pressure, higher here in the early trade by only about 1%, but of course, the damage in that stock has been done. Maybe a turnaround story there. A lot, of course, will depend on how the holiday shopping season plays out. A holiday shopping season, of course, that kicks off about 5 days later than what it normally would. Outside of Macy's, flagship store, Herald Square, New York City, is none other than Bonnie Quinn, who's standing by, keeping an eye on how many people are filing in and out of there. And Bonnie, I don't know what that crash was. Was that Santa Claus coming down the chimney? What is that?
That was a New York City trash can, as only
That's
New York
fitting.
City can provide, Romaine. But as you can see, we are seeing a steady stream of customers into Macy's. We're open about 2 hours, 15 minutes now, and what started as just a trickle has really turned into something a little bit more. And if you walk around inside, it's actually pleasantly full. So it's not a throng of people, but that does tally with the numbers that have been projected. So the National Retail Association saying there will be a record number of shoppers this year, 131.7 million, and 2/3 of those will walk into a store somewhere across the United States. That's a pretty phenomenal number when you think about it, and when you realize that the death of Black Friday has been called for many, many years now. Well, it's clearly still a tradition. It's clearly still something sociable that you do with friends and family. We've talked to many tourists from the West Coast, from Turkey, who just arrived in the city and wanted to go straight to Macy's for their doorbusters and all of their, you know, Black Friday to Cyber Monday sales. And
well, talk to us, too, about that stat that you laid out, 31 million expected to walk into a store. Give us some context. How does that compare to prior years, for example?
Well, so it's going to be a record, Katie, if that does actually come to pass. 2/3 of 131.7 million. So that's really a phenomenal number. That's almost, 35 million. So when you think about what they're spending, that's also important. We are looking for growth of between 2.5% and 3.5%, which is down from the 3.9% growth rate that we saw last year, but is healthy growth nonetheless when you consider that household spending is still holding up, but also household debt is going up as well. We saw that in the third quarter, it reached a record, and those pandemic savings are gone. One interesting poll that was done was by YouGov, of all people. They found that of those they polled, just 9% plan to spend more than they did last year. Most of the shoppers that are going to spend a little bit less than last year. So there's all kinds of numbers floating around there. You obviously won't know until next week, but we did get a little taster of it. We saw those company earnings, right? So the companies that got it right, the Walmarts, pulled people in from all sorts of demographics, all sorts of income brackets, and those that didn't, Target, for example, You know, they got mixed up with their inventory problems and they just didn't attract those customers. So we are seeing a discerning customer.
Bonnie Quinn outside the Macy's in Herald Square, and of course it wouldn't be a New York report without a trash can being banged around in the background. Welcome to our world from Studio 5 at Bloomberg headquarters in New York. We keep it rolling with Eric Fish, HSBC, U.S. Commercial Banking Head of Retail and Apparel. And you saw Bonnie out there. The lines aren't as long. You would expect that given that, you know, a lot of folks, of course, now buy online. Put it all together in aggregate. Are we going to be looking at a better holiday shopping season this time around than in 2023?
Yeah, what I'm hearing from my clients is expected growth. So we came into the season after an election where there was anxiety. And coming out of that, stores immediately launched sales. So as you mentioned, shorter holiday season, 5 days shorter than last year. And so what that created was a bit of a sprint. And the shoppers have responded. So sales through November so far up over last year.
I am curious as to what people are going to be buying. Bloomberg actually now has out its own sort of gift buying guide here, which includes something pedestrian like hand cream for a few bucks to a bespoke globe that will cost you more than $1,500. What are people going to spend? Are they going to spend for kind of more of those lower end or middle of the road items, or are they going to splurge on something that's maybe a little bit more luxury, a little bit more discretionary, or like a bespoke globe, completely unnecessary?
Yeah, I think what in general we're seeing this year is people looking for value. So regardless of what price point you normally shop in, if you were a luxury shopper, we're seeing a lot of people shifting to designer, contemporary, mass affluent. Same thing at lower price points. A lot of interest in off-price if you were normally a department store shopper. So unlocking that perceived value is critical to the shopper.
I'm just curious on off-price, though. Does that mean they don't go to the department store and then they go to, I don't know, say a TJ Maxx or something? Because can the department stores not compete in that space?
Now a lot of those department stores have off-price channels. And so those have been growing as well. It's finding those brand names that you've come to trust, but at that better value and lower price point,
I want to talk a little bit more specifically about luxury because the narrative, of course, has been that luxury is resilient. It's sort of the last to crack here, but we have seen some tremors. So just give us a more specific channel check on how luxury actually is.
Yeah, I think I'm not going to lose a lot of sleep for the luxury sector. They've had some phenomenal years, and I think we've reached a point where it's hard to comp up over the phenomenal growth. At the same time, they've raised prices considerably, especially since COVID, some almost doubling the price of their product. And so what that's created is an environment where the aspirational shopper, the person who isn't a typical luxury shopper is buying up, has been priced out a bit.
That's interesting. So basically luxury raised it too much for that aspirational shopper. How does pricing work at the luxury sector? Because, I mean, you think about sort of these bigger brands, we talk about discounting all the time. How sticky are prices when it comes to luxury?
Yeah, it's a great question. I think we'll really see that play out now that the comps have not performed. I think in general, luxury brands, it's self-fulfilling, where you raise prices, which weeds out some of the aspirational shopper, which makes it more scarce, which makes it more desirable, which makes people want to buy it more. So it's almost a virtuous cycle for them, but they have to live through some of these negative comps to get back to that.
I want to talk about the technology involved right now in the shopper experience. And let's start with the way the stores deploy it. We've seen more use of cameras, not just to track whether, you know, I'm going to walk out the door with something that I didn't pay for, but also to look at what I'm looking at, how I'm looking at it, whether I'm touching it, whether I'm willing to try it on. And in theory, you put all this together and you have a better way to target me as a consumer.
Yeah, I think this is where AI comes in. If you think about a typical small store and may have 6 to 8 cameras, you'd have to have a full-time person there for surveillance, for theft. So AI can trigger when there's something suspicious. At the same time, to your point, you have cameras that can notice where someone's eyes are looking, where they're glancing, what items they're looking at, and then aggregate that information and show real heat maps of where in a store to put the highest volume items where people are really not going. So I think a lot of opportunity to improve efficiencies.
It's a little dystopian, though. You know, we're constantly being watched. They're watching our eyeballs move around, but opportunity, like you say. Talk to us globally here, because we were talking about luxury. You think about European luxury and how that's performing. But when it comes to global appetite for more U.S.-centric brands, how does that shape up right now?
Yeah, it's a little bit of a contradiction in that we speak a lot about how the Chinese consumer has slowed down a bit in purchasing. Europe as well has been a little bit of a stagnant market. But at the same time, U.S. brands continue to perform very well in those markets. The U.S. continues to be the cultural touchstone for the world.
Wow.
Hollywood and the way we export culture. And so what that's created is opportunities for U.S. brands to continue to expand. And I think sometimes we get caught up in large, mature markets that are still great opportunities for new entrants, right?
All right, USA, baby.
All right, Eric, great stuff. Eric Fish over at HSBC, excuse me, joining us here in Studio 5. And I just want to point out, too, we've got a great live blog on the Bloomberg terminal. Julia Fanzaris, one of our reporters, is out at a Macy's in Bethesda, Maryland. I just want to give you the color that she's providing into this blog here, basically saying that only about 20 people showed up outside of the store in Bethesda, Maryland this morning. They said the store still kind of remained in partial darkness even after the doors were open. And she said that the busiest thing going on at the store is next door at the Starbucks.
I would 100% believe that. That is some great on-the-ground color that Bloomberg News is providing.
All right, a lot more coming up here on Bloomberg Surveillance. The takeover, the open and the close, together as one, like the Wonder Twins. Christina Hooper going to be joining us when we come back after the break over at Invesco. You're watching Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Surveillance. Romaine Bostic alongside Katie Greifeld as we wait for the open of the cash session here in U.S. markets. Just about 1 hour away. S&P futures up by about 0.2% here on the day. Similar moves across the other parts of the major indices, with the Russell 2000 doing what it's done for really the last few weeks here, and that is outperform the broader market. A cyclical rotation, if you will, taking a look at what's moving in the pre-market trade and what is decidedly going to be relatively light trading as well as an early close for this market. Let's get right to Manus Cranny, who's standing by with our morning movers. Manus.
Romaine, a very good morning to you. There's a juggernaut. It's called, well, actually, we're going to get off with Applied Materials. What you got here is just less onerous regulation than what we thought was going to be inflicted on those suppliers into China in the semiconductors business. So the crackdown is less severe, and this is just a representation up 2 1/8 at the moment. Of course, all that can change as soon as Donald Trump and the next president-elect comes to power in terms of what will happen with tech into China. Roll it over and have a look at some of the other stocks that I'm focused on, which is Applied Materials. Now, this is a rejection by the FDA. One of the drugs that they had put in is called Govorestat. It's an application. It's for a genetics disorder, but that's been pushed back by the FDA. RBC come out and they downgrade the stock to sector perform. They say there's significant uncertainties. Look at that, down 75% at the moment. You need more data. It needs a much more convincing package to go back into the FDA. I'll leave you with a snapshot of what's going on in MicroStrategy. Look, it's a vicarious trade on Bitcoin. You've talked a little bit about that, but what we've got here is 5 convertible bond issues so far, raising money to buy more Bitcoin. It depends what you believe, whether there's anything that can go wrong in this. And Peter Schiff, he's the famed economist, he's saying, look, this is a great short. This stock is a great short for him. He flags the risks on the repayments on those convertibles. But let me put it to you this way. The week after Donald Trump was elected, the next president-elect, $217 million flew into this stock. So there was a real velocity in terms of ownership. Lots of narratives. One was Bitcoin, 2 is deregulation. So let's see what 2025 brings on the vicarious trade. Good morning.
Good morning to Manus Cranny there, and good morning to our viewers worldwide. We talk about a market here that looks like it's setting up for gains to close out the month of November, a month that has been stellar pretty much across the board. 5% gains on the S&P 500. And Katie?
Yes.
11. No, I take that back. I was wrong. 10 of the 11 S&P sectors in the green for the month, led by discretionary stocks.
You were pretty close. What is the lone underperformance?
It was healthcare, which is right now relatively unchanged. So it's still a chance in the shortened trading session.
That's true. They have a couple hours. It's interesting, though, because you think about all this euphoria and optimism about M&A, maybe in 2025. Healthcare is always named, along with financials, but you haven't seen that enthusiasm necessarily come through in the stocks yet.
A stellar month for financials. S&P financials up 10%. The KBW Bank Index doing even better than that on the month. On here, the final trading day of November as we head into December and into 2025. Let's get some insights out of Christina Hooper, Chief Global Market Strategist over at Invesco. Happy Thanksgiving, Christina. Great to see you.
Great to see you too, Romaine.
It's been a pretty good month. It's been a pretty good year. And of course, a lot of questions now about whether the momentum that we've been seeing in the U.S. equity markets carries over into December and more importantly into 2025, or have we pulled forward some of those gains already?
I think the momentum continues. We'll probably see a few sputters here and there. I used 2016 as a guide. What we saw there was a relatively strong rally. It peaked in mid-December, but we still finished the year with significant gains from the starting period, which I would view as Election Day. So I don't think we'll see a dissimilar scenario this time. certainly the idea of deregulation has unleashed some animal spirits in markets.
It's kind of interesting to see that a lot of those animal spirits seem to be gravitating to the small cap, mid cap, and just that cyclical space. The Russell 2000 outperforming the S&P by a factor of 2 to 1 in this particular month. But this has kind of been the story that's been unfolding for quite some time. People looking for a broadening of this rally beyond the Mag 7 that started off the rally this year into something that's more broader, but more importantly, Christina, something that's more sustainable. Do you see that rotation as sustainable?
Absolutely. We've been anticipating this rotation for some time now, well before the election. And it was based on our view that we would see the Fed start to ease, we would see an economic reacceleration in 2025, and markets would discount that. So this is playing out. It's probably gotten a nice kicker from the election and expectations around deregulation, and is certainly not being stopped by any kind of concerns around tariffs or restrictive immigration policy. So it's certainly moving ahead, and I think it is very sustainable, although I do think there are certainly risks we can't ignore.
Well, let's talk about some of those risks, because you think about what could upset the apple cart here, and one of the answers I keep getting is maybe the bond market, specifically maybe the long end of the Treasury yield curve. We were having this conversation with Christian Nolting, but it seems like the bond market and the stock market aren't really talking to each other right now. But if you start to see the long end of the Treasury curve rise, 10-year yields maybe go north of 4.5%, maybe approach 5% again, what does this mean for this cyclical rotation and specifically this rally that we're seeing in the small caps?
Well, I certainly think that when you get yields that move that high, if they were to do that, that would put significant pressure on stocks. Although I think the greater pressure would be on tech names and what we consider to be longer duration assets. But the reality is it could be problematic in general. I think the bigger issue is what it makes the government do. At what point does the U.S. government say, you know, we have a problem in terms of fiscal prudence and we need to cut the deficit? We've been here before. The Simpson-Bowles Commission more than a decade ago proposed some really thoughtful ways to help solve, not solve, but at least ameliorate the kind of fiscal deficits we're running. And I don't think a thing was passed by Congress. So we could very well come to a similar situation today. The question becomes, how patient are bond investors? Thus far, they have been, but we know from other countries there are significant fiscal issues going on that could cause some very significant belt tightening, which could create headwinds for the growth picture.
Well, Christina, to that point, you think about Treasury Secretary pick Scott Bessent, and he has his 3-3-3 policy, of course, inspired by the 3 Hours policy. And one pillar of that is that he wants to cut the budget deficit to 3% of GDP by 2028. So the intention is there. As an investor, do you have faith that something like that actually can be accomplished in this political climate?
I think we want to be as optimistic as possible, and certainly I think the markets will reward any attempts to get there, even if we don't actually see 3% by 2028. I think it's certainly an admirable goal. I do think it's easier said than done. What the Simpson-Bowles Commission found was that there are just so many sacred cows in the U.S. budget. So that while you can, in good faith, propose a number of cuts that seem to make sense, there are a number of lobbying groups and areas of interest that focus on supporting continued spending.
Yeah, and that's a good point, Christina. I covered Washington for a long time, and I think a lot of people are kind of forgetting just how much power some of these industries have over our lawmakers, and they're not just going to stand idly by as you sort of, I guess, cut into some of those cash cows. It gets to the broader question, though, Christina, as to whether investors should worry too much about this in the here and now. There's a lot of talk, about this idea of, wait till the policies are passed in Congress, or wait till they're implemented in the White House before you react to them, because there still is so much uncertainty about whether these changes will ever really see the light of day.
I think that's right. You should be aware that they could be on the horizon. but we just don't know what kind of impact. We first of all don't know the scope. We don't know the timing. We don't know the kind of impact they will have. So absolutely, we should continue to invest, stay invested, stay diversified, and just be aware, but to a certain extent have blinders on.
And I mean, heading into 2025, you think about the past 2 years, 20% plus gains back to back. It's very, very rare to see that. You wrap it all together and let's set expectations for 2025. What kind of gains could we possibly be looking at?
I think we could certainly see gains between 10 and 20% next year. I think that's very possible given the kind of environment we are set up for. But that assumes that tariffs are not applied, that they're just threatened or are very, very temporarily applied. And that assumes we don't have the kind of restrictive immigration policy that sends 15 to 20 million people away, because I think that could be very problematic for our labor pools, which are already very tight, especially in certain industries.
All right, Christina, always great to talk to you. Christina Hooper over at Invesco. Normally I talk to her a little bit later in the day, but I get up early in the morning just for her as we keep an eye on the broader markets, fractionally higher on S&P futures on this shortened trading day, post-holiday trading day. One of the big movers, though, out there, at least on a volume basis, is Super Micro, more than 3.5 million shares swapping hands. And those shares at one point were down 15% in the pre-market. No news crossing the terminal right now, but certainly one to keep an eye on now, down 8%.
Yeah, it's just wild. Of course, there's been a lot of speculation about whether it would be booted out of certain indexes. I believe it was just added to the S&P 500 a couple months ago, and we'll see if it stays in that one, in addition to the NASDAQ 100. But boy, has it been fun to follow this stock.
Absolutely, and we're going to continue to follow that here on Bloomberg Surveillance. We're also following, of course, all the shoppers who are supposed to be out for this Black Friday, all Bloomberg terminal users. Keep an eye on our top live blog. Some great color out there, including some reporter who decided to go to a JCPenney in Newington, New Hampshire, which apparently, according to her, is an island of activity.
Wow.
That's a big talk here. How much are people spending, and more importantly, where are they spending it? Is the department store concept over? Well, Scarlett Fu and I had a chance to catch up with the CEO of Bloomingdale's not too long ago, Olivier Braun, and asked him about the holiday season and the future of the department store model. Take a listen.
The US market is actually the biggest and the most intense market for department stores, so it's very, very exciting for us. As a specialist of department stores, I'm so thrilled to be here. But I think we can do things a little bit differently in the future. You know, I think reinforcing the experience, reinforcing for brands and for customers, I think there's room for improvement for the future. This is what we're working on at Bloomingdale's, is a new strategy.
And of course, you were in Europe and Asia as well, a lot of experience overseas. What have you noticed that's different or perhaps unique about the US consumer and the way they shop and buy versus those in Europe and Asia?
Yeah, I think, you know, first, they're used to go to department store. The share of department store, the importance of department store for the customer is still very, very, very strong. When you compare with Asia, when you compare to Europe, the penetration here is very strong. But I think, you know, I think that the relationship with the department store and with retail overall is very transactional. And I think we have to bring back more about the storytelling from, you know, our brand partners to the customer. This is all we're working on right now. And this is a perfect illustration of what we're talking about.
Talk about how you do that. You use the word storytelling, and you hear that a lot, particularly in the fashion industry, the idea that, you know, you need to give people a reason to spend however much money on that handbag or shoes or whatever, telling a story. So how do you do that in a concept, and more importantly, in a day and age where people are much more transactional? They just want to buy what they want to buy and leave the store, or buy it online and pick it up and go home.
You know, when you're buying a bag, you're not just buying a bag, and especially for luxury brands or for premium brands, you're buying a story, you're buying a social marker, you're buying something special that actually is more than just a product. And we have to make sure that actually through the service, through the store experience, we're bringing that to the customer. The second pillar for us is exactly about that. It's about, you know, events, about activations in the stores. It's actually, you're not only coming to the store to buy, you're coming to the store because you're going to meet people you like, because you're going to see something different, you're going to live an exciting experience. So this is exactly what we're working on right now. And we want to make it bigger and bigger to reinforce the attractiveness of Bloomingdale's.
How transferable is that to other locations? I mean, this is your flagship location, so of course you go all out for it. But when you go to a store in Texas or California or somewhere else, can you replicate this?
Yeah, that's a very good question, Ramin. You know, because I think it's all about, you know, being Bloomingdale's and being a chain is actually, it's not only about the flagship. It's actually, we want to be, as Bloomingdale's, the local leader, the local destination. So we have to cascade that to every single store, to every single customer, and the teams are working on it. Of course, it's a little bit different. It has to be relevant locally, but we're doing that in every store.
Given your background in Europe and in Asia, are there plans for any sort of international expansion for Bloomingdale's?
I don't think so. We already have a partner in the Middle East who is performing really well. So Bloomingdale's in Middle East is actually a strong platform, but for now it's not a priority because we think that actually we have like a lot of opportunities in our domestic market. And we think that we can have actually strong growth in the future in the US, in our domestic market. Building a new platform in a new region is actually very, very challenging. I had a chance to experience that in the past. And honestly, starting from scratch, when you already have like mature models and mature department store brand in these regions, is actually very challenging.
What about the mix between your amount of sales that you're getting from your brick and mortar locations and the amount of sales that you're getting from digital online sales?
So right now, we're pretty much in line with actually our peers and competitors right now. So I think the market is around, 30%, a third of the sales. But actually what we observe like for the last few years is actually this fantastic growth of online. Well, not jeopardizing the store sales right now.
Is that like a different customer or is it the same customer?
No, actually we're seeing, so first online now is our #1 recruiting channel for new customers, but we have this ability to actually transfer our online customers to offline because you have the returns, because you want to actually, book or see what you're gonna buy on offline, online. So that's a great continuous experience. I think right now customers are totally channel agnostic. They don't care whether they're shopping online or offline. They want to see a product, they want to experience Bloomingdale's, whatever the platform. So for now, we're talking about online, offline. Tomorrow, it's going to be social shopping. It's going to be, whatever the channel. I think it's really about relating and engaging with the brand.
You know, if you take a step back, and I'm sure in contrast to what you see in Europe and Asia, the department store model has been struggling in the US for a number of years now. What do you think is behind that? Why is the department store model not doing as well in the US as it could be, say, in Asia or Europe?
Yeah, I think, first, the models in Asia and Europe right now are really flagship focused. So I think that's one big difference. And honestly, I think the flagships will have a bright future in the next 10, 20 years. It's not, I think, a problem at all. I think the problem here is managing such a large footprint. And that can be a challenge sometimes. At Bloomingdale's, we have the chance to be in prime locations and prime malls, so very strong locations. We have a limited footprint. So I think we have more opportunities than threats for Bloomingdale's in the future. I really do think that actually the department store model has a bright future, but it has to reinvent itself from the perspective of the customer, but also from our brand partners. We have to be relevant for our brand partners and rethink the model from this point of view.
How about the broader retail landscape overall? Are there too many stores in the US overall?
When you look at just the pure market data, when you look at the overall market is actually slightly growing, the penetration of online is going up. So for sure, the average productivity of the square feet overall in the US is actually slightly decreasing. So yes, there will be probably some losers. It's why you have to challenge yourself and reinvent your model to remain relevant for your customers, but also for your partners.
I have to ask you, when you look at other retailers, and it doesn't necessarily have to be a direct competitor, who do you envy most? Like when you walk into their stores or you shop on their website, who do you just say, wow, they really got it right. I want to try to emulate some of this.
No, first, I really think that actually Bloomingdale's is doing that right. When I discovered the model, I'm sorry to say, but I'd say, no, but it's not the only, it won't be my only answer. But actually, honestly, I was very surprised by the level of engagement of the customer. The relationship that we're building with the customer and with our partners is actually good. And I think we can even do better in the future. But I think there's a lot of source of inspirations from our competitors, but also from other models right now, whether it's in terms of service, in terms of brand mix, in terms of events and activations. There are a lot of inspirations that are in retail and beyond retail. I don't want to give you any names, but I have a lot of source of inspiration actually in the US, but also abroad. which is another thing. I think we should not be too domestic focused because we're going to miss probably some good trends that are happening somewhere in the world.
And you think that maybe what we see abroad in terms of their approach to department stores and just retail overall, you think that's going to be palatable to a U.S. audience?
I'm absolutely convinced about that. I think, we have to bring the best of both worlds, and I think this is where we're going to perform and bring something different for the customer. The customer is ready right now for something different, more inspiring, and this, we can get it from some of the countries or some of the other models in the world.
A conversation that we had with Bloomingdale's CEO Olivier Braun not too long ago. Of course, Bloomingdale's underneath that broader Macy's flagship. Olivier just took over about a year ago. His predecessor, Tony Spring, now running Macy's, the total corporation. And I don't know if you had a chance to get out yesterday to the big Macy's Thanksgiving Day parade. It was raining, though.
Yeah, there was no way I was physically going to go, but I did watch it on the television, and it was cold. It looked really unpleasant.
I know. We normally go. It's our tradition to always go out there every Thanksgiving morning, and we kind of woke up, saw the rain, and we're like, maybe we skip it out.
Did you at least put it on the television?
We did watch it, and we watched Hoda Kotb, who's a national treasure. Al Roker, love him. I don't know. Come on, dude. And then and who was the other woman? I forgot. Anyway, it was three of them. But anyway, I think it should be us.
I agree.
We should make a bid for.
I know.
Why did they get to do it?
I think it's just no one's raised their hand. So this is us officially
I'm raising my
putting in our
hand
bid.
right now. That's on my bucket list.
Yeah,
is to
Thanksgiving
host
2025.
the Macy's Thanksgiving Day Parade, but only if it's not raining. All right, we're going to set you up here for the week ahead as the music starts to play. This is Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The opening bell in U.S. equity markets just a little more than 30 minutes away. Futures slightly higher on the day, 0.1% here on the S&P 500. as we give you the diary for the week ahead here on this Friday afternoon, looking ahead to Monday. ISM manufacturing data, plus the S&P Global manufacturing PMIs. We're not a manufacturing economy anymore, but we pay a lot of attention to these numbers.
That's true. We are a services-led economy, but even still, I mean, there is a push to make us more manufacturing heavy. We'll see.
Well, let's take a look at JOLTS data. Remember we used to pay attention to JOLTS data every time, and now, I don't know, not so much. Tuesday, we do get that JOLTS data. Of course, that is going to be the drumbeat to the payrolls, official payrolls data later in the week.
But before we get there, there's even more labor market data that we get.
Really? Like what?
I'm trying to tee you up.
Oh,
ADP.
the ADP, right. Oh, that's right. Oh, I like this.
Yeah.
Segues.
Like
ADP, we get the ADP private payrolls number. So you get JOLTS, we'll get a sense of the job openings. The ADP numbers gives us a sense of the private payrolls. The beige book, which I'm told actually isn't beige, will give you some anecdotal evidence of kind of how people feel in the various
I know
districts.
you read that cover to cover.
I try to, but you know, it is a little boring.
Yeah.
But there are, sometimes you get some nuggets there and you find out a little bit more kind of underneath the hood of what those headline numbers can't tell you. And then you get to Thursday and we get some more of those headline numbers with those weekly jobless claims.
That's
Who
true.
you got on those numbers, Katie?
I'm excited to see those. It is funny how every payrolls week, and I hope I didn't spoil it, that there's payrolls coming up on Friday, you get this steady drumbeat of labor market data, and none of it matters. Something you hear all the time is never trade on ADP, because often those two numbers don't actually talk to each other.
And that brings us to Friday, the official monthly payroll numbers. Right now, the economist estimates that we have on the terminal, that survey, the median estimates, 200,000 jobs created. Of course, that would be a big improvement from the 12,000 we got the previous month. Of course, that 12,000 very distorted, of course, by storms and a few other factors.
Yeah, when you look at the chart, you basically have to put your hand over that month because it's just so noisy. It was really hard to get anything out of that. But this time around, of course, it's the final payrolls print of the year. I believe, of course, the last one we're obviously going to get before the December Fed meeting. A lot of focus on the headline number, on the rate of unemployment, but also wage growth. Big question marks there, especially as we talk about potential mass deportation next year. That's definitely the thing to watch.
We are expected to see some moderation in that wage growth on both a month-to-month basis and a year-over-year basis. Unemployment rate expected to tick up by about 1/10 of a percentage point to 4.2%, and that becomes the backdrop for a Fed meeting. Remember the Fed? They have one more meeting left this year.
That's true, and it'll be interesting. I think everyone knows that they're going to cut rates. Whether they should, of course, is a hot topic. I'm sure you're having that conversation on the close all the time.
We do have a lot of hot topic conversations on the close, and I hope you watch the close, which is my normal show, by the way. I'm not just doing this for free. We got to promote the close here every day, 3 to 5. You do a show as well. I believe it's called The Open?
Open Interest, actually. It's 2 words, 9 to 11 a.m. Next time, let's just meet in the middle. We don't have to hang out at 6 a.m.
A lot of great guests on Bloomberg Surveillance next week on Monday when the team is back. Cameron Dawson of New Edge Wealth, Tom Narian over at RBC, Seema Shah of her Principal Asset Management, and Dana Telsey over at the Telsey Advisory Group. Thanks for joining Katie and I today on Bloomberg Surveillance. Happy birthday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry, and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models, and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Friday morning. I'm Paul Sweeney. We are here in New York with Caroline Hyde. Welcome to a special edition of Bloomberg Markets on Bloomberg TV and radio. This is a simulcast thing, kids, where we simulcast radio and TV. We're doing it from the radio studio, which is an awesome radio studio, so it's good stuff happening here. Looking at the markets here, futures, Caroline, a little bit of green on the screen here on this Black Friday. Got the S&P up about 8 points, the Dow up 84 points, the NASDAQ up 21 points. Quiet day, I guess. It's Black Friday. Everybody's shopping. We got Vonnie Quinn out at Macy's. We talked to her earlier this morning.
They've had an interesting ride.
Yes.
I felt like the rather wet parade was synonymous to how some people might have been feeling.
That's a great point. But I tell you, I was surprised yesterday just looking at the parade. People were out and about. I mean, it didn't stop anybody. It didn't stop the bands.
Did you do a turkey trot? That is my question.
I did not do a turkey trot.
It was packed. It was raining cats and dogs at 8 a.m. when I hit that road. But absolutely everyone showed up. I feel like...
Is that right?
Come rain or shine.
So was it 5K, 10K?
Just a little 5K.
5K.
Sprinkling of a 5K.
5K. Very good. Are you a runner type person?
I am, but generally in pursuit of a train. So I run incredibly fast for 5K, and then after that, I'm exhausted.
Exactly. Very good. All right, so we got a lot coming up here today. We're going to break down some of these retail outlooks. We're going to break down what's happening in the market. We got some 2025 forecasts from a lot of folks as well. S&P up 25% this year.
Phenomenal.
What do you do? I mean, I'm not sure where I go. I even have green in my fixed income space. Green across the screen in fixed income. High yield, leverage loans were the places to be. That was where the real gains were made in fixed income in 2024. I'm not sure where to go in 2025. I think my Federal Reserve is cutting rates, but I'm not sure to what degree.
And the degree with which other areas have underperformed. Europe is on track for its worst underperformance versus the US since 1976, folks. You've got S&P 500 having a stellar November, all on the back of the Trump trade, the reaction to the election. I think we're on course for the best month since February. $141 billion just plowed into US equities. Biggest inflows for a 4-week period on record. And to your point, how do we broaden this out? How do we decide that we're not just playing AI for the rest of 2025 too?
Right, exactly right. So we'll get all that coming up in the next 3 hours, actually. We're doing this for 3 hours. Why not? Let's go to Isabel Lee here and see what's happening in the marketplace. Are any stocks you're looking at, Isabel?
I'm looking at Didi. It's up around 2%. It posted its second straight quarterly profit, so this is a boost for the Chinese ride-hailing leader as it contemplates a potential relisting. So the company swung to a net income after posting a net loss a year ago. Revenue rose 5%. So this report really shows a steady recovery by one of the fastest-growing companies in China. Remember, back then it was even hailed as a, quote, national champion for driving Uber out of China. Then Didi's business took a hit when Beijing really cracked down on its data sharing practices. I know, and so now it's contemplating a relisting, but it's not the same as its glory days before.
I think China's a really interesting one to be shining a light on because it's been a horrific November in many ways for Chinese stocks. What's interesting over in Asia more broadly is the changing of focus for social media companies. I think the story that really has to be talked about is what's happening in Australia. A ban for anyone under 16 using social media apps, but no one really knows how this ban would be enforced.
So this was passed Thursday night, and it's one of the strictest laws outside of China and basically countries that aren't really like authoritarian regimes, because how do you impose it? So under the new law, it'll take effect in around 12 months. We have Snapchat, Instagram, and X saying, the government is saying they're responsible for the age limit. So kids under 16 will be banned from social media, and there are penalties of as much as 32 million if breached. But here's the catch. Kids who find a way past the verification will not be penalized, as well as the parents. So it's just the company. And we have Meta saying the rule is ineffective. We have X questioning if the ban is lawful, because how do you really check? And also, they also said you can't submit official documents like passports because that will breach privacy of the kids. So how
I don't know how you do this stuff. I mean, back when my kids were younger, they didn't get the phone to their 6th, 7th grade, something. But now I see really young kids walking around the phones. I don't know how you.
We're all signing up for Wait Till 8. You have to form a group of parents and agree that you're not going to let your children use it until 8th grade because there's strength in numbers.
Yes, that is a good strategy.
That's good. I mean, when I was young, my phone was black and white. It was Nokia, and I just could play Snake. So I feel like it's really different now. And
bring back.
Yes, parents it's so hard to be a parent these days. Yeah. So again, one was also saying the simplicity of the rule highlights the complexity of the issue. But it's interesting to see governments really trying to wade their toes into this really complex discourse. Then it's wildly popular. It's 77% of support from people. But I guess it's really all about the implementation. I mean, you can have the best laws, but if you don't implement.
Real quick, Tom Keene's not here, so we can talk Bitcoin, 97,200. What's going on with crypto?
Crypto, where to begin? Last week, it inched to 100,000. It was $300 away from it, but it didn't happen. And we have all the news around it. MicroStrategy keeps buying. Their latest record was 5.4 billion. Their total number of tokens is now at 38 billion. They call themselves a Bitcoin treasury company. But a lot of people say, even with all of these hype, it's still not the same as the FOMO days of 2021. I mean, if you look at the chart back then, you could see the peak so high, but now it's kind of, it's become mainstream. But the thing about Bitcoin is it was created to decentralize from the government, but now it's the biggest holders are the big Wall Street institutions, and if the U.S. has a stockpile, then the U.S. government.
Yeah, very good. Interesting. I don't know what's happening here, but I mean, before the election, it was at 60,000.
Yes.
Now we're here are up right close to 100,000. So I guess that's the Trump trade. I don't know, but that's certainly been a play. Isabel, thank you so much for joining us. Isabel Lee, give us a breakdown what's happening, some of the key names out there in the marketplace. Let's go to this market. What do we do here? Caroline and I were just talking about. Boy, after a stellar move in the stock market in 2025, even bonds made money for you. What are you doing next year? Maria Vasilou joins us. She's head of PSET Investment Research Institute. Maria, thanks so much for joining us here. As you sit back here late November, thinking about the performance we've had across markets, across regions in 2024, how do you position 2025 here?
First of all, thank you for having me. 2025 is going to be a very consequential year for the markets because geopolitics are taking a front stage much more than we've seen in the previous year. As we see, there is a big polarization between the West and emerging markets that are really rallying around the BRICS Plus coalition, but other also forces, and therefore we're seeing really a polarization between West and more emerging market type of economies with Europe in the middle. So that is going to create a lot of different changes in the way we invest. Certainly, we're going to see much more segmentation in the markets that could arise from potentially tariffs that will be added to the existing trade barriers that could have an effect on correlations, but also on performances of individual asset classes. So being dynamic, being active, and focusing on portfolio construction will be really key.
All right, Maria, we all woke up November 6th with a new American president. We've now got a Republican Congress. How did that factor into your calculus thinking about global investment opportunities?
Well, for the time being, I think the U.S. will remain a great source of growth and performance in the markets. That has to do with the dynamism of the U.S. economy, its leadership in innovation and technology, but also a number of the policies that are being contemplated or pre-announced by the new administration could potentially unlock further growth in the U.S., especially if we see some level of deregulation, some level of incentives for further strengthening investments in technology and so on. But
does it remain therefore equities being the outperformer, or how are the U.S. Treasury market going to be affected by the 2025 new administration and a Republican sweep?
Well, we still have a Fed that is likely to cut interest rates to some extent. I don't think that as things stand now, there will be a huge margin for the Fed to cut significantly. The U.S. economy is still performing quite well. Inflation hasn't really returned to 2% in a convincing way. And a lot of the policies that are likely to take place in the new year could have an inflationary effect, at least in the short term, let alone the geopolitical side.
Let's go to the geopolitics, because this is where I think some of your notes and your writing have been particularly fascinating. Maria, what are we thinking about the appetite to buy U.S. debt globally if we see geopolitics rise and tensions between U.S. and China in particular continue to unravel?
First of all, we have to keep in mind that not a huge amount of U.S. debt is in foreign hands. It's around 28% or so. So relative to other countries, such as France, for instance, where 50% of the government debt is in foreign hands, not a huge amount of the U.S. debt is held by foreigners. But what we also need to keep in mind is that the U.S. is in a particularly privileged position because of the use of the U.S. dollar as a major reference currency. But not only that, it's also because the U.S. is the primary supplier of safe assets in the global financial system. So long as we don't have another currency or supplier of safe assets to replace the U.S., it's really very hard to sell U.S. treasuries and really reduce the foreign exchange reserves that various players have around the world.
Maria, on the currency front, is there any bear case for the U.S. dollar out there?
I think there is a bear case for the long run, for the medium to long run. In the short run, actually, what we see is that the U.S. dollar moves mostly by geopolitical events rather than inflationary concerns. So that's really what's going to keep the dollar strong. But as time goes by, I think if BRICS Plus coalition really manages to stay together and increase the trade together and create some other form of payment that could replace the US dollar in a credible way, that's likely to chip away from the demand of US dollars in the medium to long term. And that obviously is going to reduce the value of the US dollar.
Maria, thank you so much for joining us. Really appreciate getting a few minutes of your time. Maria Vassalou, she's head of Pictet Investment Research Institute. We appreciate getting a couple minutes of her time here. And I don't know, Caroline, S&P up 25%. At some point, I feel like we have to talk about valuation. Earnings came in pretty solid, but are they solid enough to kind of support this continued move higher in the market? That's kind of the question I have for a lot of strategists out there.
And you know that my obsession and role is to talk about technology. And for me, like 2024 trade was the 2023 trade, and it was NVIDIA. But suddenly you're starting to see the question mark about how much concentration there is in their customer base, how much they're able to live into their valuation of $3.6 trillion or there or thereabouts, still the most valuable company, but we have seen question marks around the ongoing buying of infrastructure.
Exactly, and what's the return on the investment? We've seen the CapEx for a lot of these big tech companies for AI, but what's the return on that? That's the question I'm hearing a little bit more.
We're going to dig into it. And look, we're also going to be digging in so much more to the so-called Trump trade. Coming up, we're going to be discussing the potential impact of the President-elect Trump's tariffs, particularly on the retail industry. Big day for Black Friday. We're going to be out to the Bloomberg reporters on the ground in the stores. This is Bloomberg.
The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debous leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
All right, I'm Paul Sweeney in New York City with Caroline Hyde. This is a special edition of Bloomberg Markets on Bloomberg Television and Radio. Multinational consumer goods company Unilever is working to fine-tune its business strategy amid geopolitical turmoil. Unilever's CEO tells Bloomberg's Francine Lacroix about the company's decision to pull out of Russia and how it plans to navigate possible U.S. tariffs. Take a listen.
It was a very difficult decision to make. I found that in my last 1.5 years, it was arguably the most difficult decision to make. But I did make it quite soon, in the sense that I wanted to create optionality for us to exit that market, and that was a tedious process. So it took us more than 12 to 14 months to come to that point that we were able to exit. And, you know, at some point in September, I felt I had the optionality on the table. And again, it was difficult, but I made the decision to go, not because of the war that's going on right now, but because I felt that the control on our business was coming down. I feel that ultimately, if you're a global company, you need to have control of your operations. We need to be able to review results. We need to be able to get the cash out of the country ultimately. We need to be able to make sure that we live up to potentially international sanctions. We need to be able to control our brands and where our brands travel. And that was something that I felt wasn't enough anymore, and I didn't see a window into the near future where we would regain that control, and that drove the decision to exit.
And talk to me about Ben & Jerry's. So the way that Ben & Jerry's was set up was also having an independent board. Will that still be the case going forward, given actually, you know, a lot of the questions that you've just been telling me about?
Yeah. No, Ben & Jerry's has an independent board, and that independent board that looks after the social mission of Ben & Jerry's only. So it's not a board that looks at the business side of Ben & Jerry's, because that's what we do, but it looks after the social mission that's there. That was agreed at the time that Unilever acquired Ben & Jerry's. It's in the merger agreement, and we absolutely respect that merger agreement. And therefore, the new ice cream company that will be demerged will respect that merger agreement.
Always necessary to talk ice cream on Black Friday. CEO of Unilever sitting down with Bloomberg's Francine Lacroix. We're going to be making the most of the Black Friday bargains, potentially. That's certainly according to Bloomberg Opinion's Andrea Felsted, with many retailers carefully controlling their inventories. There's also the prospect of the new administration coming into the United States, what tariffs mean on the horizon. So maybe you and me, Paul, aren't hanging around to make the most of some of those Black Friday deals.
Yes. Yeah, I'm not a Black Friday shopper. I'm more of a point-and-click kind of person, but we'll see how it goes. But I know they're out there.
There's a lot of pointing and clicking going on today. Andrea Felsted can join us for more and just outline a little bit of your thesis here. You're always my go-to when it comes to what the sense of the retail market is like. So are people making the most of some of these deals? They've been going on forever, it feels like.
They definitely are. Some of the early reads, we haven't got much on Black Friday yet. We've got a bit on Thanksgiving. The online numbers do seem to be up year on year. It really does seem as if consumers are making the most of those sometimes quite generous deals.
According to Adobe Analytics, consumers spent a record $6.1 billion online on Thanksgiving, up 8.8% year over year. That's pretty solid to me. Andrea,
are they not speaking to their family?
I don't know. What are people doing? Are they sitting at the table between helpings of cranberry sauce clicking? So, Andrea, what's the expectation just kind of going into this holiday shopping period? Are we expecting a growth in sales?
The overall holiday is sort of expected to be just sort of, low single-digit growth, which is the lowest for several years. But I think Black Friday will be pretty big. Retailers have actually been more restrained on discounting this year. Consumers know that. Consumers are also looking for bargains. We had Target say last week that they're not only being choosy, they're being resourceful. They're waiting for the deals. They're stocking up on the deals. And so I think you've got those two factors coming together to make it quite a big occasion.
We haven't had, actually, a bad set of numbers recently out of retail and US retail consumption in the last month or so, which is surprising given that there was the question marks around an election. What are we, therefore, likely to see consumers be purchasing? What kind of purchases? Are they thinking about potentially China-based goods and trying to get ahead of any tariffs?
Well, according to the data that's coming out, electronics, that they're buying, which obviously is one of the sectors that will be hit. So they're clearly some furniture. I think they've clearly got it on their minds, looking at the categories that are being bought at the moment.
Andrea, we're going to have Dana Telsley from the Telsley Group coming up later in the show, and she's one of my favorite Wall Street analysts covering the retail space. She was in earlier this week on Surveillance, and she said the go-to apparel thing is the Birkenstock closed-toe, clog thing.
I know them.
You know them?
Yeah, well, I've actually had a Zara version for a few years. Not as comfy, I'm sure.
John Tucker immediately ran out and put an order in for his thing. Is there anything that's kind of driving sales this year, Andrea? Is there anything hot, or is it just people kind of going out there searching for value?
I think there's a lot of value. I think definitely looking for value, making those dollars stretch further. Definitely, that will be the case.
What about luxury versus, more affordable. How are we spending there? I mean, we're about to be going out to Macy's. We've already been hearing from the Bloomingdale's CEO. Are we still in this sort of stratified, bifurcated market where the people who are able to go and buy not Birkenstock, but a Birkin bag is still there and strong, but then everyone else is going down lower to find the deals?
Absolutely, yes. You've had the very wealthy have continued to spend. Luxury's been really hurt by what they call the aspirational luxury consumer. That's the comfortable but not super wealthy. And
that's
and
buying the lipstick rather than the full trench coat.
It would be buying like a Gucci bag or something like that. So you've had two factors going on in luxury. You've had that consumers been hurt by inflation, by higher interest rates. They also have missed the stimulus payments they got a few years ago, which went into luxury goods, whereas the upper end, the real top end consumer has kept spending.
Andrea, thanks so much for joining us. Andrea Felstead, a Bloomberg opinion columnist, and some of this. Caroline, some of this data from Adobe Analytics that our good buddy Will Shaker forwarded to us. What's hot? What's moving here for Thanksgiving shopping yesterday? Online stuff. Shoppers saw great deals yesterday for toys, with discounts peaking at 27% off listed price, as well as electronics, another 26% discount, apparel 22%, appliances 19%. So I guess that's run-of-the-mill. Analysts tell me that was kind of baked into estimates that the retailers were going to need to be promotional, and we all kind of knew that.
We're kind of numb to it, aren't we?
I guess we are. I mean, like Alex Steele, for example, she'll come in here and say unabashedly, she only buys deep discounts, she only buys sales. TJ Maxx, she'll walk in there unannounced looking for the stuff that may be on sale in her size.
She's a forager.
Yes, she
I'm
is.
a renter, I have to say, so I don't even try and go near the clothing, but I am the proud holder of two small people. And so like the toys is all about it. Look, Harry Potter toys still doing really well. What a brand that has just managed to be completely resolute. It's interesting the crossover effect that we'll get with IP into movies, and we're going to be speaking much more about us all going to the movies at the moment. But apparently gaming's still where it's at. Nintendo Switch, OLED did well, the Xbox Series X, PlayStation 5, the Meta Quest, they're all top sellers too.
Yeah, absolutely. I mean, buy now, pay later. $430 million in online spend, up 10% year over year. I'm not really sure what that is. It just seems like, I don't know, back in my day it was layaway. I don't know, but you got to pay it eventually, right?
Well, that's good news for Klarna, which is looking to IPO next year, or even as soon as that. And that's the big buy now, pay later brand that's been teaming up across the board with other purchases and ways in which you're able to spend in the moment, pay for it slightly later, and the way in which they can onboard perhaps people who have otherwise been dependent on credit cards.
All right, we're going to have the market open for you in about 4.5 minutes' time. Got the S&P futures up 11 points, the Dow up 99. I quote that for John Farrell. He does not like that, but we're just short of 45,000. NASDAQ up 46 points. So all about 0.2 higher here. Not much to write home about, but that's okay. It's the Friday after Thanksgiving. 10-year Treasury yields pulling in about 6-7 basis points. We're now around 4.19% on your 10-year Treasury. And again, in honor of Alex Steele, we'll call out some oil here. WTI crude oil just above $69 a barrel. I filled up the vehicle down on the Jersey Shore, $2.75 a gallon. Pretty solid. Yep. We got more coming up. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making. That's what we cover each week on our podcast, The Deal. I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never. Ready? Go.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
All right, Caroline Hyde and Paul Sweeney, we are live here in our Bloomberg Radio studio in Midtown Manhattan, simulcasting on Bloomberg Radio in television. We're going to get the market open for you in just a moment here. If you're just looking for, just kind of a slight open here, it's going to be a nice, quiet Friday. There you go, opening bell. They're off and running, as Bud Fox used to say back in the day. So it's gonna be a quiet Friday. Markets are closing early here. Equity markets closing at 1 p.m. Wall Street time. So you've got that. We're here till 12 noon. S&P opens up about 7 points. The Dow up 85 points, up about 0.1%. So you got a little bit of a lift there. The Nasdaq up about 0.1% too, up at 26 points here. Looking at the bond market, they are trading the bonds. They decided to come in today. 10-year Treasury off about 6-7 basis points, 4.19%. I'm still not refinancing my mortgage, sitting at 6%. I need Jay Powell to work a little bit harder there. Alex Steele is sitting on a 2.75% mortgage. How about that? She's never leaving. She's never moving. Never leaving. WTI crude oil, $69 a barrel there. So we got markets open. Bitcoin, or as Tom Keene calls it, I won't even refer to what Tom Keene calls it, but it's up 97,200 per token. Isabel Lee joins us here in our Bloomberg Radio studio. Isabel, what are you looking here in the markets here on this Friday?
Super micro, it was down as much as 15% in pre-market, now down around 7%. So companies reacting to new rules that the Biden administration is weighing additional curbs on sales of semiconductor equipment and AI memory chips to China. So of course, this would continue to escalate the U.S. crackdown on Beijing's tech ambitions, but it would stop short of stricter measures that was previously considered. So they're looking for this to be unveiled as soon as next week, according to people familiar with the matter. It's kind of watered down, but still, it's very interesting how this, I feel like I read a headline almost every week about this tech crackdown and this tit for tat between U.S. and China.
I mean, Supermicro's had an awful lot of headlines thrown in its direction of late, mainly of its own making, as it's lost accountants, had to rehire, finally got BDO USA to come on board and look through its financials, but it still needs to be filing that 10K if it wants to stay in the NASDAQ.
I mean, who's this accountant? I mean, seriously. I mean, when I started in the business, it was the Big 8, then the Big 6, and now we're down to the Big 4. And if you're not audited by one of the Big 4, I don't know what you're doing.
BDO USA, I think, only has one S&P 500 company, but it's still a big win that they even got an auditor to say yes. There's that.
Good point.
I mean, going global for a minute, we were looking at Meta ahead just a moment ago, talking through some of the regulatory trials and tribulations they're going to be having this time from Australia. Look, they're only off by about 1/3%. People aren't that worried, but it is precedent-setting what Australia is doing.
Oh, definitely. This is why people are saying it's interesting to see governments really try to wade into the discourse of this whole social media. We all know it's dangerous, even for adults. I have to stop myself. I'm like, you've been on Instagram for no reason for 30 minutes, stop that. So obviously for kids, it's even more detrimental. Their brains are still developing. But the rule is popular. It's 77% approved by the Australian people.
To ban it for anyone 16 and under.
Because in theory, it's great. Like even as parents, my parent friends, they're like, my brother doesn't allow his kids to really look at any social
But does he let them watch YouTube? Because YouTube's not part of this crackdown.
YouTube is deemed by the Australian government to be health and education related. So there's that part. But then, of course, we have the big tech companies saying this is unlawful, or how is this even feasible? Because the law, which will be implemented in around 12 months, will penalize the companies, but not the kids and the parents who circumvent this policy. And you can't even submit official documents like passports, so how will you check?
I was with a group of kids recently, and they were saying that I've only got X number of minutes left on my So there's software that parents can install that limits their amount of time spent.
And quite often you can go, I acknowledge that, and then on you go.
Is that right? Okay.
There's a time limit.
All right. I mean, that seems like a reasonable thing. I'll give you X number of minutes a day, kids, to waste time.
Yeah.
I should do it for myself. What's going on in the crypto space?
Cryptocurrencies are still below 100,000. That's really just a big round number that people are looking at. But now it's moving further and further away. But we also have a lot of analysts saying that, you know, coming into this week or last week, Bitcoin was really oversold. So this pullback is natural. It feels like that's what they always say. This pullback is natural. But really, it's still such a phenomenal rally. We're 97,000. Yes, we're not 100, which really has no significance, honestly, other than psychological and maybe technical. But the rally that we're seeing now, some also say, isn't at all similar to the craze we saw back in 2021 when Bitcoin was really just this big, massive.
I like the Mike McGlone, Bloomberg Intelligence. He gave me this call on crypto, I don't know, 6-7 years ago, 8 years ago, which is fixed supply and presumably ever-growing use cases. And if you think that's a commodity, then the price has to go higher.
That's fair. And now
that's my call.
And now with this fixed supply, there are only like very few that people can mine and people can own. And we have governments like the US saying that they will have a stockpile. So that's actually the whole thing. From decentralized, it's now centralized.
Yeah, absolutely good. Isabel Lee, thank you so much for joining us. Really appreciate that. Isabel Lee in our New York City radio studio. Let's check in with Ben Guttridge. He is Invesco Investment Solutions Investment Director. Man, a lot going on there. Ben, thanks so much for joining us here. I'm going to ask you for your 2025 note. I know you're writing it as we speak. It's going to hit my inbox any day now. How are you guys at Invesco thinking about investment opportunities in the new year?
Well, perhaps there isn't much room in the outlook once you've read out the full length of the job title, but yeah, we're still feeling optimistic about 2025. As always, investors should be braced for volatility, not least given some of the political outcomes could be a little disruptive to global growth. But look, the core features that are in place is that growth looks pretty resilient, certainly from the US, and that is coupled with fading inflationary pressure. Yes, of course, we would like, or most would like, inflation to moderate at a keener pace, but it's still moderating, and the outlook, despite political outcomes, we think is inflation can continue to moderate, and that would see policy getting easier as well. Now, again, qualifying, I think the pace at which rates are cut, there is keen debate there, but it's still an easier path for policy. So resilient growth, fading inflation, easier policy, sets up equities quite well for 25, we think.
I remember when Invesco was just a bunch of GARP investors in Denver, Colorado. Now you guys are all over the world doing everything. It's a great story. Ben, is it still, do you prefer U.S. markets versus Europe? Because, boy, the value in Europe just is so compelling, but I know it's been that way for a while. How do you guys think about where the geographic opportunities are?
Well, look, I mean, we concede also the valuations make one uncomfortable leaning towards the US relative to European markets. However, that is still the way in which we would position portfolios, preferring US equities given the earnings power that some of the mega caps, retain. Very difficult to see that being heavily disrupted, and scope for more of a catch-up trade beneath that surface as well, given the resilience of growth and the growth impulse that we'd expect to come through in 2025 as well. Yes, Europe has value. It's well worth, of course, having some in portfolios, but not our preferred market at the moment, given the absence of confidence from the consumer there. The employment market not moving quite in the right direction either. Sorry.
No sorry needed. I'm feeling sorry for those that have to report on and navigate French politics on a daily basis at the moment, with Marine Le Pen giving the French Prime Minister Michel Barnier basically an ultimatum as soon as to Monday, basically, until she just considers toppling that government. Is it all around geopolitics in Europe as well, or is there any area that you think, some clients are interested, we're seeing certain countries outperform?
Well, yeah, I mean, the politics, as it was forever thus, is a complicated setting in Europe, and the immediacy of some challenges also don't do much for short-term confidence either, although there could be some positive outcomes. But again, it's a tricky one to navigate. But yes, there's certainly value within European bourses. I mean, the UK market stacks up relatively well. Again, valuation looks interesting. I think that's been a charge levied at UK markets forever and hasn't really sort of played out very nicely. But there is some catalyst, management pretty active on buybacks, dividend yield still really compelling, and UK growth not going to be too bad relative to some very downbeat expectations. But it's not just about, the quality of or the appeal of UK equities. I mean, if you have, a decent chunk in US equities, UK equities offer a reasonable hedge against that. You think about, heaven forbid, a repeat of 2022, where inflation comes charging, roaring back, where commodity prices, oil prices are much higher. A bourse like the UK can offer something of a hedge against that. So there's a nice sort of diversifier of UK equities versus US equities in there.
Go into the inflationary outlook from your perspective, because the UK actually had a bit of a scare with inflation, the CPI coming in ahead of expected the other week. We've got Europe still very much on the we're going to be cutting rates path, it feels like. US, walk us through it. Are you generally seeing a commitment that Fed is going to keep on cutting despite inflationary pressures being at least warned of if we get those tariffs?
Well, look, I mean, conviction is moderating, and you're right to touch on tariffs, because, look, on the one hand, of course, they put a segment of your consumption basket up, which is inflationary, but that very quickly eats into your spending power for other areas of discretionary spend. So it can very quickly be deflationary. But given that the Federal Reserve had prior called inflationary bouts to be transitory, it may not want to behave or act in that manner in the future, even though it might believe it should look through any sparks of inflation. It might want to settle that down with rising interest rates, with taking interest rates higher. So certainly alert to that risk. But on balance, we see wage inflation continue to moderate. And I think, such a big part of the inflation calculation is shelter. And we're seeing rental agreements that are being renegotiated currently suggest that part of the inflation calculation can continue to moderate really quite handsomely. And we're seeing that from the autos market as well. So there are disruptions and threats to the inflationary challenge. And it's a great question, because our conviction is moderating, is narrowing. But on balance, still think inflation can continue to move lower from here. And that is, of course, good news or better news for monetary policy.
Hey, Ben, for those of us that missed the Magnificent Seven trade, are financials a place to look here in this new world we woke up to recently?
Well, for those who've, I wouldn't say that the Magnificent Seven trade has been missed. I mean, you've missed a good chunk of it, I suspect, but there's still more to go for. One would suggest. But I think financials, to your point, do look interesting. I think the deregulation story is a tricky one to navigate, but at the margin could be helpful. But of course, steeper yield curves are nice for interest margins for banks, and with the resilient growth outlook. Of course, that's better for loan income. And then, you know, we think with the US markets in pretty good shape, you know, some of that some of that investment banking income, again, could be a nice fillip to earnings as well. So financials, in the US could enjoy something of a catch-up to that Magnificent Seven in 25.
I take the bait. Magnificent Seven, still room to run. Which names? I mean, NVIDIA has sunk pretty hard, actually, since its earnings, even though the earnings, if you look at them, were pretty phenomenal, but they didn't live up to some expectations, and it has been beaten up for the last few trading days.
Well, look, in and around earnings season, it's a tricky one. There's a lot of technical factors with, you know, shorter-term actors trading these names, and it does seem as though NVIDIA's got to beat the very highest. It's not just about beating the average expectation; it's got to beat the highest that's on the screen. But the earnings power still looks uninterrupted. The other of those Magnificent Seven continue to consume, you know, the Blackwell chip going, great guns, and no let-up from this AI infrastructure rollout from the other Magnificent cohort. And we're seeing so many businesses really use this to great effect. It's not just about filling out forms going to be quicker anymore. It's about driving genuine efficiency gains in business. So it would be very cautious to suggest that somehow Magnificent Seven would be interrupted by dramatic earnings disappointment. That doesn't really sort of stack up. There could be other technical factors like a yen carry trade unwind if the yen were to move a little firmer, but I don't think it's an earnings issue for the Magnificent Seven.
Some strength in the yen today, that's for sure, after some positive inflationary numbers there. Ben Guttridge, how good to have you. Thank you so much. Invesco Investment Solutions. Coming up, Paul, we've got so much more to be digesting on Black Friday, on the Thanksgiving weekend sale projections. We're going to take you live to the shoppers. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything.
All right, I'm Paul Sweeney in New York City with Caroline Hyde. This is a special edition of Bloomberg Markets on Bloomberg Television. Looking at these markets, Caroline, a little bit of green on the screen. We got the S&P up about 16 points. That's 0.2%. The Nasdaq up 57 points. That's 0.3%. And so we got. I'm looking at the Russell. Russell's doing a little bit better. The small cappers doing a little bit better. 10-year Treasury yields coming in. The 10-year 4.19%. And then for our good friend Alex Steele and those folks who follow the commodity space, let's quote WTI WTI crude oil still below $70 a share. That's a good thing for those of us that drive around for a living. So we got it's a little bit of green on the screen.
Looking at the sectors, consumer discretionary up 0.4%. We want to be looking into what's happening this holiday season, what consumers are doing. Bloomingdale's is going full wicked. I don't know if you've missed it, but boy, I've been hit around the head with the wicked marketing, that's for sure. I am their demographic. It's all about that musical, and Bloomberg's Scarlett Fu and Romain Bostic, they spoke with Bloomingdale's CEO, Olivier Braun, about the reason behind the decision to go all in on Wicked. Bloomingdale's stands ahead of the holiday season. Just take a listen to what they said a little bit earlier in the month.
The models in Asia and Europe right now are really flagship focused. So I think that's one big difference. And honestly, I think the flagships will have a bright future in the next 10, 20 years. It's not, I think, a problem at all. I think the problem here is managing such a large footprint. And that can be a challenge sometimes. At Bloomingdale's, we have the chance to be in prime locations and prime malls, so very strong locations. We have a limited footprint. So I think we have more opportunities than threats for Bloomingdale's in the future. I really do think that actually the department store model has a bright future, but it has to reinvent itself from the perspective of the customer, but also from our brand partners. We have to be relevant for our brand partners and rethink the model from this point of view.
How about the broader retail landscape overall? Are there too many stores in the U.S. overall?
When you look at just the pure market data, when you look at the overall market is actually slightly growing. The penetration of online is going up. So for sure, the average productivity of the square feet overall in the US is actually slightly decreasing. So yes, there will be probably some losers. It's why you have to challenge yourself and reinvent your model to remain relevant for your customers, but also for your partners.
I have to ask you, when you look at other retailers, and it doesn't necessarily have to be a direct competitor, who do you envy most? Like when you walk into their stores or you shop on their website, who do you just say, wow, they really got it right. I want to try to emulate some of this.
No, first, I really think that actually Bloomingdale's is doing that right. When I discovered the model, I'm sorry to say, but I'd say, no, but it's not the only, it won't be my only answer. But actually, honestly, I was very surprised by the level of engagement of the customer. The relationship that we're building with the customer and with our partners is actually good. And I think we can even do better in the future. But I think there's a lot of source of inspirations from our competitors, but also from other models right now, whether it's in terms of service, in terms of brand mix, in terms of events and activations. There are a lot of inspirations that are in retail and beyond retail. I don't want to give you any names, but I have a lot of source of inspiration actually in the US, but also abroad, which is another thing. I think we should not be too domestic focused because we're going to miss probably some good trends that are happening somewhere in the world.
And you think that maybe what we see abroad in terms of their approach to department stores and just retail overall, you think that's going to be palatable to a U.S. audience?
I'm absolutely convinced about that. I think, we have to bring the best of both worlds, and I think this is where we're going to perform and bring something different for the customer. The customer is ready right now for something different, more inspiring, and this, we can get it from some of the countries or some of the other models in the world.
All right, that was Bloomingdale's CEO Oliver Braun alongside Bloomberg's Romain Bostic and Scarlett Fu talking about the global growth opportunities out there for our friends at Bloomingdale's. Let's keep up the discussion of the state of retail on this Black Friday with Bloomberg's Vonnie Quinn. She is right outside Macy's in Herald Square in New York City. That's around 34th Street, 6th Avenue. I'll be walking by there a little after noon if they ever let me out of this booth here. Vonnie, talk to us about kind of the feel, the flow, the buzz at Macy's flagship store.
You can see it's getting a lot busier now, Paul. So Macy's has been open for almost 4 hours and it has been freezing. We're at a balmy 39 degrees. It was 10 degrees lower than that at 6 a.m. And there were shoppers, a trickle of shoppers. I was just though inside for, a little research, and it's getting to the point where it's getting a little uncomfortable. There are plenty of shoppers inside and you might just be needing a cattle prod a little soon if you want to get those deals. That tallies with what we are expecting. We are expecting a record Black Friday, which is interesting because of all the death knells that have been sounded for Black Friday, right? It's not going to be the case this year. The National Retail Federation says 131.7 million people across the United States will shop on Black Friday, and 2/3 of those will shop in store, which is a fascinating statistic. Yeah. It speaks to the nature of the consumer, and perhaps the consumer wants to feel those goods again.
Feel, touch, experience. rub shoulders with too many other shoppers. Vonnie, of course, Bloomingdale's is part of Macy's holdings, their higher end. What then does Macy's expect for its own flagships? Because they've got such an extensive offering within the store for many a price point. Is it going to be the price-sensitive shoppers? Because I understand that if you were the early birds, you got given, what, a $10 discount?
$10 gift cards on top of the discounts that were in store already. Yeah, so a little incentive, let's say, Caroline, not a huge incentive. And those big doorbuster deals that we used to see in Black Fridays past, they weren't really there, right? You could see that all of these discounts have probably been, at least for the last couple of days in the store already. That said, Macy's broad goal is to return to sustainable growth from 2025, and it does seem to be concentrating on those brands that are doing extraordinarily well for it. So, for example, the Karl Lagerfeld brand, the French Connection brand, and you are seeing that in the store as well. And also those first 50 stores, as they're called, that's what Macy's has been concentrating on. Analysts have been very positive about the progress that Macy's has made over the last year on those 50, and that's going to be expanded more broadly, as well as closing some of the less performing stores across the country. So the broad goal is going well. If you walk in today, of course, you'll see all sorts of cosmetics even on discount. That's not something that you've seen too much in years past. And also plenty of holiday gift sets and things that might catch the consumer's eye, an extra thing to put in the basket. Because as we saw during earnings season, there was a wide disparity in the brands that did well and in the brands that didn't do well. So, for example, obviously Target was one of those that did not do well. Macy's will see more before December 11th because their full earnings has been a little delayed. But you did see it with Kohl's, for example, as well, not doing particularly well. Walmart was the one that really blew away everybody, drawing in people at every price point, every demographic, and every income level.
Vonnie, on my way to Penn Station today, I may wander into the Macy's store there. Am I going to get any deals? What's the promotional environment like?
Well, everything looks to be 40% off, 50% off. You obviously have to be pretty discerning yourself and maybe even get the help of ChatGPT or some other AI tool in order to tell you, is this really 40% off the full retail price, or what's really going on here? There are things like price matching. If you get a better price, on Cyber Monday, they will obviously honor that. But discounts are pretty good. I will say that we know from Adobe Analytics already and from Thanksgiving sales that the best discounts were, as you can imagine, on consumer electronics. You're talking about 27.2% off listed price there. And toys as well, a huge discount for toys. You're looking at 26.5% there. Going into this, we were expecting things like furniture to be about 19% off retail and appliances about 18% off retail. But I would point out that there is the potential for tariffs to come onto some of these goods, as soon as next year. And so that's something that consumers need to think about as well while they have those few extra savings in their pocket.
Maybe they're trying to quietly front run any slightly more expensive Chinese goods. Vonnie Quinn, battling the elements and the people outside Macy's flagship store. We so appreciate it. Thank you. Meanwhile, we've got so much more about retail to be discussing. We've got Dana Telsey coming on, Telsey Advisory Group. She will give the perfect read of ultimately whether we are trying to get ahead of any increased prices coming from future tariffs.
I know. What I love about Dana Telsey is her financial models are to die for, the valuation models to die for. She's got all the numbers down pat. But then you ask her about fashion, and she'll riff on fashion for 10 minutes. I mean, she's got the whole package. So if you, depending upon how you approach the retail sector, she's got you covered.
I'm going back into 90s nostalgia because when Vonnie said French Connection, that was me growing up with wearing, FC UK T-shirts, thinking I was being truly almost naughty. And now that, what's old is new again. 90s is back with a plum, and French Connection doing well for Macy's, it seems.
Yeah, good stuff there. It's a question. You always have to figure out kind of where the fashion is, where the consumers are, and that's part of the challenge of being a retailer, I think.
So fashion forward.
Yes, exactly.
You are.
Me with the navy blue
It's a perfect uniform.
Solid. Never go wrong. All right, we're going to have more coming up. S&P 500 up 18 points. How about that? This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Guerra at the G20 Summit in Rio de Janeiro, Brazil, and this is Bloomberg. Today
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debous leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debous leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
We are broadcasting from the Bloomberg Radio studios in beautiful Midtown Manhattan here, simulcast on Bloomberg Radio and Television. Caroline Hyde, Paul Sweeney bringing it to you. It is Black Friday, so we are bringing you all the retail angle here today. A big, big day for the retailers. Vonnie Quinn's out there in the field at Macy's in Midtown Manhattan. We have got a lot of other folks around giving us the latest reporting here. Markets, we're trading here today at least until 1 o'clock Wall Street time. We're giving it a half-day effort here. S&P up 20 points. The Dow up 104 points. NASDAQ up 99 points. That's a 0.5%. We'll take note of that. And looking at the bond market, the 10-year Treasury coming in about 7 basis points, just below 4.2% on your 10-year. So the Treasury's coming in a little bit. On the commodities market, gold a little bit higher. It's up about 0.5% at WTI crude oil. Pretty steady here, just below $70 per barrel. So a lot happening out there in the marketplace. On a quiet trading day, this day after Thanksgiving. I always work it. Back in the trading days, I could make a lot of money trading on a Friday after Thanksgiving. Very illiquid markets. You could kind of run some stocks every now and again and make a pretty good day. So I always came in.
And not queue for the coffee machine. That's always a joy.
Yeah, exactly. You can make a lot of money on that on trading day.
And instead, you're just here for the great conversation.
Exactly. Now I'm just in that mode. I come in on Fridays after Thanksgiving. Why not? It's a good day. Isabel Lee joins us here to give us a sense of what's happening under the hood here on these markets. Isabel, what are you looking at?
Applied Therapeutics, it's down 76%. That's the biggest intraday drop on record. So this comes after the company's new drug application for a treatment called galactosemia was rejected by the U.S. FDA. The FDA said it's had test deficiencies in clinical application. So RBC Capital Markets said the rejection was disappointing and downgraded the stock to perform from outperform. So they cut the price target from 12 to 4. William Blair also said it was unexpected and disappointing, which is why I think the shock is really so big because of the unexpectedness. We have Baird also cutting its price target from 14 to 5. So really a lot of shock and not good news there for the company.
It is a relatively small biotech company, now worth only $250 million. It was 75% higher than that.
When you trade biotech stocks, I feel like it's a binary situation. I'm right on the test, it triples in value.
Yep.
I'm wrong on the test, it goes to zero. I don't know how you trade those things. If that's what the hedge funds, I don't know. It seems impossible. It's the last thing I'd want to trade.
Well, that's the joy of being diversified. One hopes.
That's true. And for the so-called normal person, it's hard to understand these treatments and studies. Like, you think, is it permanent? Is it a short term? Can they overcome this? And it reads jargon.
That's right. All PhDs and MDs, like Sam Fazeli, Bloomberg Intelligence, gets his PhD. Instead of going in and helping the world, he goes and becomes a stock jockey.
Wow, that is helping the world. Financial literacy is an important service to the broader world. What's interesting is, like, looking on a points perspective, we're still dominated by the Mag 7 today in either direction. Nvidia, Tesla, Apple are your biggest points contributors to the upside, and the downside, it's Microsoft, it's Google. I just want to go to number 4 on your upside in terms of points to the S&P 500. It's Meta. Now, you would have thought maybe Meta was being hit to the lower side after Australia's ruled to ban a load of social media over there for 16 and younger. However, there is reporting coming out of Bloomberg and others that one Mark Zuckerberg had a nice little luncheon over in Mar-a-Lago with the future president. And look, we've been worrying about that relationship between Meta and Trump. Maybe that's alleviating some worries today.
Maybe, and a lot of the tech leaders who made political comments in the previous election cycle stayed mum this cycle. So that's what they're saying. Maybe they're learning that being apolitical, at least publicly, is best. But that definitely is kind of a boost for Meta. But back to this Australia controversial law, I think it's also because it's Australia. It's not yet the U.S. And this isn't to undermine Australia in any way, but the U.S. is the biggest market ever. And we also don't know the feasibility of this law. It bans children from under 16 from using social media. Tech companies are really curious about how this will be implemented because the government said you can't submit official documents, so how can you prove whether you're underage?
Technology.
Yes.
Is the ideal.
Right.
And then if you circumvent the law, if you're the child or the parent of the child, there's no penalty. But if you're the company, there's almost a $32 million penalty. That's pretty steep, I think.
Well, compared to their cash, it's not. They can have a lot of $32 million fines and it not matter a jot, but still the statement and the precedent's there.
Yeah. Meta stock up 0.5%. I mean, I'll take you back to Microsoft 25 years ago. You just write the checks, and you go on, and the stock keeps moving higher. I think that's what's happening here. That's how I think the investors are looking at it. Isabel Lee, thank you so much for joining us. Isabel Lee, giving the latest on what's moving in the stock market. It's Black Friday. It's important for retailers. This is it, folks. Do you know why it's called Black Friday? Because you're running the red all year. Ding. And then Black Friday comes in. It's a big advertising year. I mean, a big sales year, and you kind of go into the black. You become profitable. Black Friday. Dana Telsley knows that better than anybody. Dana Telsley Advisory Group CEO and Chief Research Officer, the go-to voice on Wall Street for all things retail for, I'm going to say, 25 years, and I'll leave it there. Dana, it's been a wild 4, 5, 6 years for folks trying to figure out how they spend their money, where they go. Do they spend it on goods, services, experiences? Give us a lay of the land of retail here on a Black Friday. 2024?
First of all, you're exactly right, and thank you for having me. It is the Super Bowl of retail, always on Black Friday. Retailers prepare for months in order to get it right. So what do you do? What is happening right now with retail? I think the consumer is resilient. I think it's about product newness that's driving sell-through and conversion. Look what you have with companies like a Birkenstock, a Ralph Lauren, Deckers, and on. And then it's also about value, because that lower-income consumer, they are being very watchful about their dollars, given what they're seeing out there, the continued pressure of elevated prices. Inflation might not be going up, but it couldn't come down fast enough for them. And that's why you saw Walmart talk about the fact that most of their share gains came from the higher income consumer. And given that 60 to 65% of their sales come from grocery, you look at Target, which has more coming from discretionary, nearly half, that was the headwinds. And then you look at what's happening with gift giving. Who would have thought that the off-pricers like TJX, they're getting in the throes of gift giving, and they're gaining more traffic. But what every retailer is doing this holiday season, increasing the marketing. You have a very social consumer who basically is enticed, whether it's by their phone, whether it's by emails, or in store. And yes, what we saw this morning so far, because I was at Macy's too already, as the mornings come on, you've seen traffic increase. And I think that social engagement with the physical store is helping. We also have a compressed holiday season. Don't discount that. Thanksgiving on the 28th. Last year it was on the 23rd. The pull forward of promotions led to more conversion earlier in the season, but consumers are still going to spend. A lot of them are procrastinators.
Am I going to get deals, Dana? What's the promotional environment like out there? Because that impacts the margins for your companies.
It does. Average promotion these days seems like around 30%. When I did my walkthroughs yesterday, I even found a store that's open, because you know me, I have to be in a store every day. Aritzia in Soho was open. Just opened on Tuesday, brand new store, absolutely beautiful. But overall, it's around 30%, that's the discounts. Some of it may be higher, some may be a little bit lower. Luxury goods is having a tough time, but you never see discounts at luxury goods. What you need to see on 57th Street is those Louis Vuitton trunks. But overall,
gorgeous,
beautiful. I think it'll be a resilient holiday, a 3 to 3.5% increase. On the margin side, increased marketing is planned. The promotional levels are planned. I think there's more stability in the margins, more uncertainty what the top line looks like.
More uncertainty if you're starting to think the costs are going to go up because of tariffs.
Yes.
Are consumers even considering that? Because I'm pretty sure the retailers are.
The retailers are considering it big time, and the diversification from China is playing at every single retailer. Look what you had this week when even a Abercrombie and Fitch talked about less than 10% of their goods coming from China. Look what you had with Gap talking the same thing. On apparel, with those who have significant exposure, and a lot of it is footwear companies, they're working to diversify fast. Because if anything, look at the NRF study where nearly 80% of consumer spend dollars would be impacted by tariffs, requiring nearly a double-digit price increase. Consumers don't want that.
They definitely don't. Do they want to be shopping via influencers, or do they want to be shopping via their own viewpoint and long-term love affair with certain companies and brands?
I think influencers create the viewpoints. I think influencers help the consumers overall see what's working for them. The brands also advocate for influencers too, because they want that awareness given to expand their demographics. Because influencers today, it could be for millennials, it could be for baby boomers. What you know is consumers are watching pictures. Pictures are on Instagram, they're on social media, and I think that's going to be one of the bigger themes as we move through 2025.
Dana, e-commerce versus bricks and mortar. I know the pandemic brought a lot of e-commerce market share forward. How's that dynamic these days?
Overall, you need both. You can't have one or the other. It's got to be both. And what you're seeing is the store fills a broader function. They do buy online, pick up in store. They do ship from store. And you know what they do? Back to that word again, social. They create social engagement. So I think overall, you're going to continuing to see bigger gains in the holiday season from online. Should be high single digits this year. But you need that bricks and mortar in order to drive awareness. And you're seeing more retailers invest in their stores. You have more stores being opened in terms of retailers and net openers, but of a smaller size box than in the past. Go physical is what I'm about.
Go physical. I mean, even on Thanksgiving, you might go and find a store that's open. I mean, I feel like Black Friday deals have been thrown at me for the past week, if not longer. I mean, we were reporting on, of course, 11.11 and what happened with the Chinese discounts that just were never ending in terms of length that we had for Singles Day. Is this just the new world order? Do we feel like there ever isn't a discount on?
I think one of the things that happened this year, it just started earlier.
Yeah.
The minute Amazon had their Prime Day, and then you had the Target Circle Week and Walmart in October, it was game on for the holiday season because everyone wanted to capture as much as they could of this consumer spending dollar, because it's back to school in the fall and it's holiday that are your two key shopping time periods.
Anything the go-to gift or item this season?
I mean, you're going to look for Birkenstock closed-toed shoes.
See,
that's gonna
told
be
you.
That's going to be a go-to that people want.
Birkenstock closed-toe shoe, as opposed to the Birkenstock sandal.
Yes, but you got to have both.
Okay.
So, and then you know what? Look at the Brooklyn bag at Coach. That's been super popular lately. On Running and their footwear, that's been working very well too. So we've got things, and you know what? Even some of the private companies with intimate apparel, like Skims, you got to watch what they're doing.
They have some cool marketing campaigns as well. Dana, it's always great to have you. Thank you for making us a pit stop. She's going to pop to Bloomingdale's next door now, Dana Telsey.
I'm going there next.
CEO and Chief Revenue Officer at the Telsey Advisory Group. Always a joy to have her. Coming up, look, it has been not just a banner year if you've been perhaps on the promotional hunt. It's been a banner year if you've been long this S&P 500. But one of the most high-profile corners of Wall Street is headed for its worst year since the pandemic. We're going to be discussing that coming up next.
All right.
This is Bloomberg.
Absolutely. Looking at these markets here, we got the S&P 500. We're trading higher, Caroline. I mean, this is it's a quiet day, quiet volumes, but the S&P is up about 0.5%. The Dow, I quote that for John Farrow because he totally discounts the Dow, but it's just below 45,000. It's up about 0.3%. The Nasdaq 19,190. I like that. I'm going to go on 20,000 watch soon.
Volumes 0.6%. Look at these volumes. We're down 30%.
How much?
30%.
Yes.
Than your average over the last 20 trading days. So people are just chilling back, maxing, relaxing, all cool.
Absolutely. I mean, Tom Keene, I don't know what Tom Keene does on a day off. I can't even imagine. But
he has
Russell,
martinis at 10 a.m.
Exactly. No problem at all with that. I'm right with you there, dude. Russell up 0.6%. The 10-year Treasury yield down about 6 basis points, 4.2%. So pulling back from that 4.5% level we saw earlier. And we do have a Fed that's cutting rates. Somebody forgot to tell the bond market because people have been shorting bonds and pushing the rates up, and now we're getting a little bit of a pullback there. WTI crude oil just under $70 a barrel. Remember, the cost to get a barrel of oil out of the ground is about $50. So our friends down in Texas and Louisiana still making money down there. Gold higher yet again. Mike McGlone, 5, 6, 7, 8 years ago on commodities. This was his commodities call. Buy gold, short everything else. And
he also said buy Bitcoin maybe, and it's 98,000.
Yeah, I mean, yeah, he said that.
Gold.
He's been pretty good. BI Go to get all your Bloomberg Intelligence research and go to the commodity stuff. That's everything you need to know. We're gonna have more coming up. This is Bloomberg Radio and TV simulcast. This is Bloomberg. Good morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the US-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
All right, Caroline Hyde and Paul Sweeney, we are live here in our Bloomberg radio studio here in New York City, Bloomberg HQ, a special edition of Bloomberg Market.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Markets in Forex and rates. They've not been having a great year for traders there. They're hit by tighter margins, by challenging macroeconomic backdrops. We want to get to it with Jess Menton, who's been going through what is a great story of how difficult it has been to trade the macro of late, because there's been these shock moves that go against everyone.
It really is, and especially because Paul and I have spoken so much over the last couple of years about, especially going into not even just this past year, but in 2023, after we saw the low in the S&P 500 in October of 2023, 2022, there's still so much gloom and doom. And a lot of it has been, especially when you're coming out of COVID and what the disruptions from the pandemic did, because a lot of people were trading off of playbooks that would have worked maybe prior to the pandemic. But when you have a once in a century pandemic like that and it upends business activity, it made a lot of the trades tougher to call because there were certain strategies where you would use, for instance, if this happened, you'd buy this, or only, there would be 100% track records for certain thresholds where, you wouldn't see the S&P 500 hit another low. But there were a lot of things they had to throw that playbook out. And I'm sure, Paul, in your career with a lot of things you saw, especially if you thought about the housing crisis, or I know you were on the floor a couple weeks before the 87 crash.
Oh, yeah.
Things were very different when you think about pre-COVID versus now. So especially on the macro side, if you're looking at the Citi Economic Surprise Index, particularly for the U.S., that's continuing to outpace those expectations. And even if you're looking at fourth quarter GDP growth for the Atlanta Fed GDP Now model, that's above 2.5%. So still you're continuing to see strong consumer, but also on the corporate side of things for particularly the stock market, that's continued to power things higher. And Gina Martin-Adams always talks about that too. So those have been some key indicators, Caroline, why a lot of these things just haven't panned out for some of these banks.
And some of it used to be, I'm not going to say used to be, but some of the biggest profit generators were from the macro traders.
They were.
At the sell side firms. And then the hedge funds in particular, you're a macro trader. That just meant you were smarter than everybody else. I didn't think about equities or bonds. I think about the macro picture, everything. And those are the guys and gals that made huge amounts of money. But I've heard that, again, the performance has not been there.
No, they haven't been.
I wonder if the funds are pulling out. The fund flows out of those strategies.
Oh, so that's a key thing too, because even the S&P 500 right now, it's on pace for over 20% gain this year. That's the first time you'd see back-to-back gains of that type of magnitude since the late 1990s. And we saw that happen twice during the dot-com bubble, but continuing to see even going into next year. It seems like every year when the calendar turns, there wants to be this kind of doom and gloom. I know a lot of people are pointing at valuations, say the S&P 500 right now trading around 22 times forward earnings on a blended basis if you're looking in the terminal. If you look at the average over the last decade, it's around 18. But even if you strip out the Magnificent Seven, it's still around 20. But a lot of traders I speak with, they'll point to how valuations, especially if you look over the last 10 years, or even if you want to look at sentiment, that stuff can stay kind of frothy and grow on for weeks, months, even potentially years there. So they tend to not like to use that for trading strategies right now.
What's interesting, I think it's Coalition Greenwich, which has been putting together a lot of this data around the moon music for rates traders and for Forex. A little bit more optimism if you're trading foreign exchange, but rates is painful in large part because of electronification here as well. Things look very different 20 years ago because there were fewer market makers and most people were still picking up a phone.
That's a good point. And it's just a different dynamic of how interconnected the global economy is, as well as technology when you're trying to make some of these trades too. And so when you're looking at kind of the Forex market versus the rates markets too, especially because the conundrum of when you're seeing yields rise, whether that's, was that on a strengthening economy or is that trying to tell you something about Federal Reserve policy? It's make it a lot more of a conundrum coming out of COVID too, Caroline.
So what's the smart trade for 2025? Is there such a thing? Or am I just buying NVIDIA?
Right, I know, because especially with that, NVIDIA, the third quarter didn't do as well as it had in prior quarters, but still the best stock in the S&P 500, not over even just the last year, but the last 2 years. But something that people are watching, if you look at the ETF that tracks semiconductor companies and chip makers, SMH, that's important because there's a level around 240. It's trading around 242 right now, but the 240 is kind of more of a broad support measure that they're looking at. So you kind of want to look at that as a gauge, not even just for semiconductor companies, but also kind of more broadly for the stock market to see what that could mean because, not surprisingly, the big weighting that chip makers have.
We're going into software. 500. That's what I hear.
Exactly.
Software is going to be the new trend.
Right, and so that's a big thing too because it's beyond even just some of the big AI type players there. But when I'm speaking with a lot of portfolio managers, that actually is a space. Like Marianne Bartels, she's on Bloomberg a lot too, but software companies is one of the ones that she continues to plow money into.
All right, Jess, ESPN.com, Texas 5.5 point favorite. Put a little action down there?
I was not able to get a ticket, unfortunately. We were talking about how expensive those. I think the average purchase price was over $1,000 for this
experiential.
Right.
Experiential. That's what the kids are doing. Texas at Texas A&M. College Station, Texas.
That's right. It's going to be great. I'll watch it here.
Exactly. Jessman, thank you so much. We appreciate it. All right, coming up, it's not too late to get your Christmas tree. I haven't even thought about Christmas tree.
No, of course it's not too late. It's not December.
Exactly. I get my Christmas tree on my birthday. That's how we do it. We'll talk to National Tree Company CEO Chris Butler about consumer demand for holiday decor and how all the talk about tariffs is affecting the outlook. That's a good point. You think about all the stuff you put up.
So much of my stuff is Chinese.
Exactly.
Every light.
I mean, people are going to rebel here if we get these tariffs the way some folks are talking about them. I mean, because it's affecting everything that people buy. So we'll have to see. We'll talk Christmas trees coming up. This is Bloomberg.
The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
All right, good Friday morning from New York City. I'm Paul Sweeney along with Caroline Hyde. This is a special edition of Bloomberg Markets on Bloomberg TV and radio on this Black Friday morning. Markets like trading, but we are trading higher in this abbreviated trading session here today. Again, the U.S. stock markets close at 1 p.m. Wall Street time. S&P 500, that's up about 0.4%. That's 26 points. The NASDAQ up 113 points, 0.6%. So we'll take that here on a quiet day. Looking at the yield space, let's look at 10-year U.S. Treasury. That's off about 5 basis points, 4.21%. Remember, folks who are just at 4.5% a cup of coffee ago, as Tom Keene would say. On the commodities front, I look at WTI crude oil, a little bit higher here, up about 1%, but still below $70 per barrel. Gold higher yet again. Bitcoin up 3.3%, 98,200. That gets your attention here. All right, let's see what's happening underneath the hood in some of these markets. Isabel Lee joins us once again here in our Bloomberg radio studio. Isabel, what are you looking at?
Marathon Holdings, so it's up 8%, largely because of Bitcoin also edging higher. And so far this year, the coin has edged 120% higher. It's really spectacular. And if there's a Trump trade at work, you can definitely say it's this one. Not really small caps, not all the others, but it's Bitcoin. So if you put your money at the start of the year, it grew 123%.
Is it still called Marathon?
I think it's Marathon.
M-A-R-A Holdings.
Yeah, I think they rebranded, didn't they? When they did one of those ones during, it's now, M-A-R-A, Global Leader in Digital Asset Compute. So now they're suddenly wishing that they had crypto or digital back in their name, but the rebrand happened and they moved swiftly on. But I mean, Marathon Digital, to quote its old name, is sort of synonymous with the fact that this was a Bitcoin trade, this is a crypto mining trade, and we want to make the US the crypto mining capital of the planet, according to President-elect Trump. But MicroStrategy has been the one that I've looked at time and time again, up 66% for the month of November. It has been the Bitcoin sort of proxy, even though there's a load of other ways to play Bitcoin now.
Yes.
I'm interested, though, in more broadly, like November, what else has just won out other than MicroStrategy?
Other than MicroStrategy, which is the best stock in the S&P 500, there's that. It's Paycom Software Inc. So they had a good company earnings report. They reported adjusted EPS for the third quarter that beat estimates. We have Mizuho Securities raising the price target to $190 from $170. We also have Warner Brothers. So like other media legacy companies, it also reported profits from their streaming services. But this is just a month.
Bit of M&A as well might be happening. I mean, we might assume under the next administration that M&A in media,
That's it. You got it.
Loser regulations.
Caroline's got it. I think people were, David Zaslav, the CEO of Warner Brothers Discovery, came out at the Allen and Company big media conference and said, boy, if we get a Republican administration, M&A is going to be a big part of the media story. Now he's talking up his book because his stock's in the proverbial toilet and he needs some help somewhere.
That's true, but I also have had traders and analysts tell me that maybe people are over-optimistic because he's not even sworn in. We have just 1 month to go till January, and a lot of the things that incoming President Trump says may not even come true. So you have to be cautiously optimistic, I would say. But there we go. It's up 38%.
Good stuff. What else?
The losers, we have Supermicro as the biggest loser. It's down 33%. We know that the company has gone through a lot. The changing of the auditors, the compliance thing with the NASDAQ. They're struggling to stay listed. We will see whether they will. They're still in talks. But while NASDAQ considers whether to keep them listed or not, they will remain listed. So there's that little saving grace there, but it's down 33%. And also, we're looking at Moderna. It's also down 22%. Now, I don't want to pin this really just to Robert F. Kennedy's nomination, but healthcare stocks in general did sink when it was announced that he was going to be the Department of Health and Human Services boss.
Yeah, that's a tough way to play. I think it's just a tough sector in general to play because of the regulatory overhang in general. But I don't. People, complain a lot around the Thanksgiving table about drug prices all the time. I don't know. For the last few years, I've been sticking up for them. I mean, they delivered that vaccine so quickly, and that was a saving grace for all of us. So I'm kind of taking a time out from bashing the big pharma companies.
R&D is a totally different way of thinking about drug discovery here in the U.S. versus Europe.
It is, and it's huge spending on R&D, and then if you can't do it in-house, you just go out and buy somebody. That's kind of the way they do it, I think. So as I always say, in my next life, I want to come back as a healthcare M&A banker, because every Monday morning...
I'm liking that you're banking to banking, though.
Yes, every Monday morning. Yeah, no, exactly. I can't go too far out. All right, Isabel, thank you so much for joining us. Isabel Lee giving us the lowdown on winners and losers in the stock market in November. Again, we've got some green on the screen today. Christmas trees.
Have you got yours?
No, of course not. I buy my Christmas tree on or about my birthday, which is early December.
Real one?
And yes. But I've gone both ways over the years because my kids were younger. They had some allergies. We would go for several years. We went to fake tree. I'm kind of indifferent.
Yeah, we got a bit of both.
You do?
We get one real one for the smell,
yes,
and one fake one for the downstairs vibes.
Okay, so that's how you do it. All right, it all works out. People have their play there. Chris Butler joins us, National Tree Company CEO, joining us here, I believe, from Cranford, New Jersey, which is a cool little town there. So, Chris, talk to us about kind of Christmas decorations. What are people doing these days? What's different today versus, I don't know, 10 years, 15 years ago? It seems like people are going nuts for Christmas decorations.
They are going nuts, yeah, and I like what both of you guys said. You switch between the artificial and the real. We're big fans of real, as well as artificial. Obviously, 80% of U.S. consumers buy artificial trees, and so the real is definitely the minority. But again, obviously, we're big fans of trees in general. But it's the pre-lit now, so trees come pre-lit. Obviously, there's no mess. They're a lot cheaper. The materials are a lot better. There's a lot of functionality with the lights that you can get today, and so that's really what we're seeing. And there's a lot of extra wreaths and garlands and things being bought as well. And I think with the Instagram generation, the show me generation, people are really now decorating to kind of show their friends and show their followers just how beautiful their homes can be. And so, as you said, Caroline, they have a lot of trees in a lot of different rooms. And so, maybe the kids have a tree now. The kitchen has a small tree, putting the mantelpiece with garlands and small trees. So, we're seeing a lot of incremental decorating with a lot of different items. And in terms of getting back to that swell thing, so you're right, the main reason people buy a real tree is for that real Christmas smell. We bought a company called Sensicles a few years ago, and they are a scented ornament which smells just like Christmas. So if you hang your scented ornament on an artificial tree, you get that real tree smell as well.
And no allergies. One might assume. I'm looking at, I got onto your website. First thing, Holiday Magic begins. Enter a week, win a gift card. Blackout Friday, blowout deals up to 80% off. How much are you having to think about discounting? How much, amid perhaps fear of some that where you're getting your supplies from, the cost might have to go up in the future?
Yeah, no, it's a great question. So look, Black Friday through Cyber Monday this year, obviously, it was 1 week later. So the holiday season is a week later. So I think every retailer, us ourselves included, are really discounting to make sure that we can kind of capture those sales that we might have missed otherwise, given the week's delay. In terms of the tariffs, look, we've been on a diversification trend over the last few years now anyway, trying to diversify ourselves out of just one source of manufacturing, which would be China. I think if the tariffs go through, who knows what the tariffs will be or when they will go into effect. But, from our standpoint, obviously it's impactful. And so we're trying to diversify our manufacturing base between now and kind of 2026. The promotional things we're doing right now really aren't in answer to that. It's really more just to kind of capture those sales for this season. But if you are a consumer and you're looking for a tree and you're thinking of buying a tree or other holiday decor, this year is a great time to buy it, because if those tariffs go into effect, prices will definitely go up in the next year or so.
Can you give us a breakdown of sort of how much of your supply chain is dependent on China?
Yeah, it's very large today. So I can't give you the exact numbers, but it's very large. But we are diversifying out. We've been on this diversification journey for a few years now. Yeah. And so, probably by the end of 2026, we could be completely out of China, which, is a significant change.
So anything particularly the hot seller this year, Chris?
Yeah, so it's funny. So my wife loves the sparkly trees, the snowy trees, and many consumers love those things. But, what we see year after year after year is that green triangle, the kind of the staid, good green triangle, solid materials, great lights, multi-function lights. So, it's not a trend-driven industry. I will say this year, disco is back. So kind of a bit of a retro feel for disco. Who doesn't love a bit of disco with their Christmas tree? So disco is back. So we've definitely seen some sales on some of our kind of disco-themed items. And but again, it is, people still do prefer that traditional green tree with either the white lights, clear lights, the multicolor, or again, we have the dual color functionality. So that's what we see every year.
Are you white lights, Caroline? Or are you different colors?
I think one of ours has multicolored. but I think in general, I'm a boring person. I like a white light with only red and gold vibes going on, and then our thing is we collect Christmas decorations from any city that we go. So then, and then you have to remind yourself where the hell you got some of these random items. But I'm really interested in not just about the idea of what color lights or whether you're doing sparkly or disco, but you must be talking, Chris, to people in your industry that are doing the real tree situation too. How much you're going to have help this year by the fact that we're here in the Northeast, we've had terrible lack of water. We've had droughts, and the local Christmas fruit tree farms next to me have been struggling.
Yeah, it's a great question. 80% of, like I said, 80% of consumers already buy artificial trees versus 20% of consumers buying the real trees. So it's a small market already. And unfortunately, with some climate change or with some just weather in general is definitely hurting. Look, Oregon a few years ago got hit. There's some fungus issues in the Carolinas. So it's a tough business to be in, doing those real trees. And look, we're here to pick up the pieces when they falter with some of their supply chain.
Chris, is there any regionality in your business? Do people in the South, I don't know, spend more on their decorations per capita than the Midwest or anything like that? Or is it pretty standard across the board?
It's pretty standard. We do see the coastal towns going more for kind of Christmas by the sea type themes, but typically, our sales are driven by population centers. So, very good sales in the Northeast, obviously, California, Texas, Florida. It's really population driven. We don't necessarily see big regional differences in our sales anyway. We sell, most of our sales are online, so we sell through Amazon, Wayfair, Home Depot, Macy's, etc. And so we really see sales driven by, by where people live.
Hey, Chris, thanks so much for joining us. Really appreciate it. Chris Butler, National Tree Company CEO. Caroline, have you noticed differences in the way people decorate their houses here in the U.S. versus growing up in England?
That's a great question. More is always less here.
Well, we're more, right?
Yeah, you are more. You are more here in the United States. And I love that. There's like a tree for every room, a tree for every person in the family, every animal that you might have. So I'm all in on that. I feel in the UK we were a bit more dependent on real trees, just as a general. I mean, we're a smaller country and easier access to them.
But is there something that you guys do in England that we don't do here decoration-wise?
So Advent calendars.
Advent calendar.
Advent isn't deemed like a religious taking part in the UK. Obviously, the Queen of England or King of England. I mean, generally there is a little bit more focus on Church of England within the country. But actually, the countdown and a 24-day opening of a calendar, whether there's a sweet, a candy, an act of kindness in it, that was something that I grew up with. I found it much harder to get here. And crackers is my other one. But now suddenly we're getting them everywhere. I'm seeing my local storehouse crackers has Advent calendars. I'm thankful.
Yeah, the Advent calendars, it's a thing here. We do the Advent calendar. But again, I wonder if there's differences. When I think of, London or England, and I just think of the little candle in the window, something understated, an understated tree, and that's it. But not the craziness that we have here. I mean, some of the people put this stuff out on their yard. It's unbelievable.
I mean, where I am, we've still got a giant skeleton crawling out of the ground near the school. People don't seem to be putting away their Halloween stuff. I'm hoping someone puts a Santa hat on him.
Yeah, very good. All right, we'll see how that goes. I think, it's the day after Thanksgiving. Now you can kick in and start doing whatever you want Christmas-wise.
Yeah.
But
all in on the music.
The Christmas music on the radio in October.
My dentist was playing it, and basically just after summer, I was like, how are you going to cope for the next few months? It was already hell going to the dentist, let alone with the music. Next up, we're talking social media, folks, over in Australia. This is Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
All right, I'm Paul Sweeney along with Caroline Hyde. We're here in our New York City radio studio, special edition of Bloomberg Markets on Bloomberg TV and radio. It's that whole simulcast thing that we can do now. This holiday season, Bloomingdale's is going for an immersive experience with the Wicked movie and leaning into what's become a merchandising juggernaut. Bloomberg's Scarlett Phil and Romaine Bostic went to Bloomingdale's and sat down with the CEO for more on this. Let's take a look.
It's a wicked pairing, a legendary musical.
Of course, Wicked.
And an iconic flagship in the heart of New York City.
It's retail as a theater for us. It's actually bringing experience to the customer, bringing excitement, energy. This is what we're doing. It's not only about selling products, but you're living a moment, which is very important.
Bloomingdale's transforming into the land of Oz, with 150 brands diving into the world of Wicked.
From candles to clothing, the retailer is incorporating the frenzy around the movie into the shopping experience.
Retail overall is very transactional, and I think we have to bring back more about the storytelling from our brand partners to the customer. This is all we're working on right now, and this is a perfect illustration of what we're talking about.
Bloomingdale's is leaning into a more immersive model as questions emerge over the strength of consumer spending this holiday season.
The National Retail Federation expecting sales to grow at a slower pace than last year due to a more discerning consumer.
I really do think that actually the department store model has a bright future, but it has to reinvent itself from the perspective of the customer, but also from our brand partners. We have to be relevant for our brand partners and rethink the model from this point of view.
In year 2 at the helm, CEO Olivier Braun oversees more than 30 stores and 20 outlets, with no plans to expand its international presence. However, the retail veteran is relying on global style and global shopping trends to help revive the U.S. department store experience.
I have a lot of sources of inspiration, actually in the U.S., but also abroad, which is another thing. I think we should not be too domestic focused because we're going to miss probably some good trends that are happening somewhere in the world. We want to do less, but bigger, like more impactful, bolder. This is exactly what we're doing.
And no better time to go bold than the holiday season.
We're building memories, and we're building the sales of the future by doing that. So we have to preserve these moments that are very, very special for our customers, for our teams. We love this moment. When you like retail, you love this holiday season. This is the magic happens in the stores.
That was the CEO of Bloomingdale's there. Now, from Land of Oz to a different type of Oz. Australia now is just paused. Do you like why I did that?
I like that.
Just passed, in fact, a controversial new law actually banning under 16s using social media. It's one of the toughest crackdowns that we've seen yet on platforms like Facebook, on TikTok. And this is as governments worldwide really try to grapple with the ways to protect children from harmful content. Bloomberg's Peter Elstrom joins us now, and you head up our team in Asia across the world of technology. Is this a seismic precedent being set here, Peter?
Well, we have seen governments around the world struggle with this very question. How much access should minors have to social media and to other kinds of technologies? They've struggled with how to implement some of these concerns, how to address some of them. Parents are certainly upset. So what we're seeing in Australia is one of the most dramatic moves yet, where they are going to ban social media for under 16s. As you say, this is not something where you can get your parents' permission and then get back on. This is a blanket ban. It is very controversial, as you say, that technology companies companies are pushing back hard against this. Meta has objected, Facebook, of course, and also Elon Musk has talked about how this is a fascist step by the company. But Prime Minister Albanese has led this personally. He's got a lot of public support. Yeah. He also has a lot of support within the government. So he's moved ahead with this, and they're pretty determined to make this stick.
I mean, it's wildly popular. I think it was about 77% of adults support the move, according to a YouGov survey. But you might, if you're a cynic out there, be like, of course Meta's going to push back. Of course TikTok's going to push back. But they have grounds to push back because many feel that actually this is, in many ways, a very blunt instrument being imposed and very hard to navigate.
Yeah, there are difficulties in terms of implementing something like this. The companies have about 12 months before they have to actually implement it. The government is also putting the burden of implementation onto the companies themselves. There's some debate about whether the social media companies should take the lead on this or whether the app stores overseen by Apple and Google should do this instead. But this is going to be squarely on the companies to actually implement this and to figure out the best way to do this. It is not impossible to do this. Companies love to say, oh, it's rushed, it's a very difficult decision to implement, but governments have been able to do this in the past. The question is exactly how you're going to implement the technology. China's actually been quite successful at implementing these kinds of guardrails around how teenagers use technology, but of course that's a country where the concerns about privacy are much less than you may see in Australia or the United States or the UK even. So there will be questions about how they're going to implement this. It would be difficult for them to actually implement this, but the government is determined to move ahead with it.
So, Peter, that's kind of where I'm coming from as a parent. Although my kids are grown and out of the house, they can do what they want, as far as I'm concerned. But technologically, how do they actually do it? Is it a piece of software that, I don't know, Facebook would put on its software that figures out what your age is and therefore access?
There are many different choices. I guess I'd begin with one example out of Norway, though. They tried to implement something like this with kids where they tried to set a limit on how young kids could get on, but more than 70% of them figured out ways to get around it, around their parents and around the technology companies. So kids often are smarter than we are in terms of implementing these sort of things. But when you've seen it done successfully, like in places like China in particular, you have to register. You have to have an account that's identified with a particular individual. They set gating factors. In China, they don't let kids get online after 10 o'clock at night or before 6 a.m. in the morning, so you don't have kids going out and using this kind of technology. It is something from a parent standpoint that you would probably see as quite useful if you're able to implement it. China also, because they have much more centralized control over these things, limited how much time kids could spend on things like games and on social media. You can't really use the same kinds of procedures in a place like Australia or the United States.
Yeah, I mean, so in Australia, I know Caroline was citing those statistics about the support for this, but I can't imagine that working here. It just seems like a lot of folks would say, wait a minute, the government can't tell my kids what to do. It's up to me as a parent to decide, all that type of thing. But I guess Australia's gotten past that.
Question here, I think the broader question here is whether this is going to go beyond Australia into places like the United States or into Europe. Certainly in Europe, France has taken the lead on this. They feel like it's very important to have some kind of guardrails around how kids use technology, especially social media. We've seen lots of harm done to children through these things. Also in the States, you have a couple of individual states that are quite determined to do this. Florida probably has been the most aggressive in terms of looking at some parameters around this, but there are other states that are very concerned about how kids are using technology. They see that it is very harmful. I mean, people have talked about this as a psychological experiment being done on our kids without our permission, right? And they want some kind of parameters around it.
Now, I'm going to play devil's advocate here because sometimes there are kids who feel very alone, unsupported, need access with social media to people that they associate with themselves. And actually, UNICEF, the United Nations Agency for Children, have come out saying, look, Australia's ban would push young people into darker, unregulated places online. They're worried about their rights, severing access to information. And they said instead of banning children, we should hold social media companies accountable for providing age-appropriate, secure, and supportive online environments. And to be fair, look, Instagram had just imposed safety for 16-year-olds and younger. Private accounts, messaging restrictions, sleep mode, for example, enabled between 10 p.m. and 7 a.m. And so is it really with Pandora's box already open, is the onus on the companies to now more seriously give me, the parent, a way of helping my child use it rather than just taking it off the table and lacking access to some kids?
Yeah, it's a very good question, Caroline. Is there a way to improve some of these social media sites and make them valuable instead of just banning them outright? And I think Australia got to the point where they feel like they've waited long enough. You know, if you expect Facebook to do better or X to do better, many of these other platforms, they're just not going to do it. I mean, you just have not seen it over the past few years. There's been many attempts. They really haven't made very much progress. And so the question becomes this ultimatum of, do you let kids on in the hope that things are going to improve, or you just cut them off for now and perhaps put additional pressure on companies to do a better job of regulating the content that you're talking about? Really, the algorithms here are part of the problem because they're not leading kids to the kinds of solutions that you're talking about. They're leading them to addictive kinds of content, and we've seen that again and again and again from the technology companies.
Peter Elstrom, it's so great to have your perspective. We really appreciate it. Thank you. Thank you. Over in London, but really he's based out in Asia. Coming up, we're going to be getting so much more insight on social media trends. This one's going to be interesting, Paul. Amma Vensbox, co-founder and president of LTK, like to know is what that means. It's basically how influencers sell stuff, retail stuff, to me, the consumer. We're going to marry social media with Black Friday.
With you, that's it's a perfect timing for it here because social media is such a big part of the advertising promotion landscape these days. All right, we're going to have more coming up. This is Bloomberg. Good morning.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debous leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
All right, I'm Paul Sweeney in New York City alongside Caroline Hyde. Welcome to a special edition of Bloomberg Markets on Bloomberg TV and radio. We're doing that simulcast thing on this Black Friday. We got some green on the screen here, folks. Stocks are moving higher in this abbreviated trading session today. The S&P 500 is up 0.5%. NASDAQ doing a little bit better, up about 0.7%, 19,190 there on the NASDAQ. On the yield space, yields coming in ever so slightly. The 10-year Treasury yield, we're now trading around 4.20%. On the commodities front, WTI crude oil is higher by about 1%, but still below $70 per barrel. It's that whole supply-demand thing out there. Definitely some concerns about demand out there for global crude, particularly out of China. Gold higher. Bitcoin up 3.3%, 98,200. We're keeping an eye on that because we like nice round numbers, like $100,000 for Bitcoin. That was some resistance before, and it pulled back. We'll see how we do going across. And remember, Bitcoin trades like all the time. You got to stay on top of that stuff. Let's talk to Isabel Lee right now. She's looking at the equity markets, and she joins us here in our Bloomberg Interactive Broker Studio. Isabel, what are you looking at?
I'm looking at Target. It's up almost 1%. The company announced its 2-day Cyber Monday sale from December 1 to 2, and consumers can expect up to 50% off of thousands of their products. Target is interesting. I don't know what to make of it because last week it was added back to Oppenheimer's top stock list after being removed last month. But also last week, the company slashed its earnings forecast another quarter because of flagging sales and just big earnings miss. I mean, I was surprised when someone said earlier, Vonnie Quinn, that people still go to stores to shop because I order everything online. And I think it's also big box retailers, not just Target in general.
Yeah, I'm surprised that people have come back as much as they have. And what I heard from like Dana Telsley's of the world, it's the whole omni experience, the online, the physical, the ordering and picking up and all that. So they call that omni-channel in retail language. And I guess that's the future.
It is. We all want sort of a cross-platform experience, whether that's in real life or online. I'm with you, though, as well. I'm all about online and renting, to be honest.
Oh, you do the rent-to-runway thing?
I do, yeah.
That is awesome. When I first saw that 5 or 6 years ago from the people here at Bloomberg, what a great concept. I mean,
they need to do it for guys. There's not an offering for you gentlemen, unfortunately.
Business.
I love it. Unfortunately, its market cap is down a ton because, funny enough, they don't make that much profit on it yet. But I'm told by Jennifer Hyman that things are going to be straightening out over there, and I love it. So I hope it doesn't go anywhere. Meanwhile, you're talking about some of the biggest points contributors on the day. Nvidia, surprise, surprise, adding 9 points to the S&P 500. Tesla is the second biggest. And Tesla's just had a phenomenal November, whether that is fundamentally driven, whether that is meme and vibes and Trump association. But once again, one of the key bulls out there is putting out a bullish statement around Tesla.
Oh yes, Wedbush. It's saying Tesla is likely to unlock $1 trillion worth of AI and autonomous opportunity. And of course, this comes after the Trump administration is aggressively heads down on everything AI and an autonomous path, and of course everything Elon Musk. To your point, it's maybe sentimentally driven too, but Tesla's march towards 1.5 trillion to 2 trillion valuation has really now started. We have a lot of federal regulatory issues around full self-driving and autonomous cars expected to be lifted. That will obviously benefit Elon Musk. But Wedbush is a big Tesla bull. It's one of those really staunch.
I mean, he's a massive bull on any tech. Is there anything? Let's just bring up Dan Ives. Wedbush. Does he actually have any sell recommendations on any stock?
He's been a perma bull, and he's, with the exception of 2022, he's been right.
He covers 43 companies. He's got 38 buys, 5 holds, 0 sells, a big fat 0.
Huge Penn State football fan. That's what I know. All right, let's go real quickly here. Crypto, Bitcoin up 3.3% here, 98,000 and change here, moving higher.
It's moving higher, but I think it's almost like a weekend now, or even probably worse than a weekend when it comes to liquidity. And we know that there are wild price swings when it comes to those days. But we have crypto-related stocks also up. Marathon Holdings, which is now on August 29, the company did file an amendment, Caroline, to rename from Marathon Digital Holdings to Mara Holdings.
Love that you looked that up.
Anyway, they're up around 9%. I also dig deeper. I was like, why are they up other than because of Bitcoin, but they also bought Bitcoin. 703 Bitcoins at an average price of 95,000. This puts their ownership to around 3.3 billion. But
average price of 95,000. That feels quite toppy.
But I mean, if you believe that Bitcoin will be 1 million one day, but it's still nothing to MicroStrategy, which owns 38 billion. I can't even imagine that amount, but yes, that's how much MicroStrategy owns.
All right, good stuff there. All right, thank you very much, Isabel Lee. Really appreciate that. Again, looking at the markets here, abbreviated trading. Equity markets in here in the U.S. close at 1 p.m. Wall Street time. Bond market, I think 2 o'clock. Maybe.
Good of them to come in today.
Yes.
You know, like a lot of the other holidays, bond market is like peace out, Cub Scout, but equities just always working.
Always there. That's good news for us. Here we got the S&P and Dow and the NASDAQ all trading a little bit higher here today. Let's check in with our next guest. He's a professional. He does this stuff for a living. Rob Hayworth, Senior Investment Strategy Director, U.S. Bank Asset Management. Rob, just looking at SPX, I know some people might want to look at SPI, the equal weighted. That's more like 15-16% gain. But the SPX is up 25% here. Fixed income people, even they made money this year, particularly the ones that were willing to take some leverage in the high yield and leverage loan market here. Let's reset. Let's think about 2025. What do you guys at U.S. Bank think about 2025 opportunities?
Yeah, it's probably going to be tough to match the returns we've had this year across the risk spectrum, particularly for U.S. stocks for 2025. But we think the setup is particularly is decent, really, as we head into the year. I'd highlight a couple of things. One, the labor market remains strong. The unemployment rate is still quite low. Two, we've got Federal Reserve cutting rates, maybe not as much as we expected, but they are cutting rates, and those rate cuts are really going to be more supportive as we get into the middle and later next year, so that will be helpful. And then three, the earnings story is really quite good still on the S&P 500. You're looking at still 10% earnings gains expectations into 2025, so we think there's room to run here for this market. Maybe not 20+% returns again in 2025, but certainly room to get those high single-digit, low double-digit sorts of returns in the new year. And we would extend that to the low-quality bond market, to high-yield corporates, to high-yield municipals, particularly because those fundamentals still look very good, right? We're seeing debt ratios come down, the economy is still growing, and that's giving them room, giving us more room to earn that income and avoid some of that distress that we typically see at the end of a cycle in those markets.
So, Rob, you and your team waking up the day after the election, did you guys change your asset allocation, the way you thought about markets? Because a Republican president and a Republican Congress means a lot of things to a lot of people from an economic perspective. How do you guys think about it?
Yeah, no, it certainly does. We certainly looked at it as we've put some of the risk factors behind us, and we did really two things. One, we looked to go overweight equities relative to fixed income. We think that trend continues, even with slightly slower or moderating growth here in the U.S. We think the trends look good for global equities in the new year. And then two, we really pressed our overweights in the credit sector. We've got spreads that are quite low, so if you think about that relationship between high yield bond yields and treasuries, that's fairly narrow. But the reality is the fundamentals are getting better. Earnings stories are getting better. Debt spreads are getting better. You're seeing distress and defaults come down. So we think there's room to run in both these trades that have done very well in 2024 and should continue into 2025.
Okay. With 2025, and we're so pleased you're here, Rob, because you've joined the technology show before, and we've talked a lot about the AI trade. When you're looking at the S&P 500 at a new record high today, if they hold on to these gains, same for the Dow. NVIDIA, a big contributor, basically, to the indices. Now NVIDIA's part. I'm interested as to whether it's still those same names that galvanize the benchmarks next year.
No, we think this can open up, right? We think there's room for other companies to finally participate. The interesting thing about the artificial intelligence trade is the growth is still there, but that pace of growth is coming down. So, over the next couple of years, that's going to be an important place to be, but probably not in the near term, right? Those probably don't stay the leaders in the near term. We think this starts to broaden out to more cyclical names, financials, industrials, utilities, which benefit from interest rates kind of stabilizing here. So we think this is a broader rally than we've seen before, and that can encompass global stocks, right? There's not a great economic growth story happening outside the U.S., but valuations are inexpensive, and as cyclicals start to benefit globally, right, we could see some relief, right? That's one place we think investors need to maintain a toehold is foreign stocks.
Get more nuance there? Like, are you talking Europe? Are you talking China even? Asia exposure?
Yeah, for us, we're staying fairly diversified there. We're not yet to the point of trying to pick very narrow winners. We think it's a space where, right, we've had a strong dollar that may continue, but it might not. And two, we think there's opportunities across all those markets. And it hasn't been a great story for Europe or China, but we'd have investors, look across the whole space.
Hey, Rob, on the fixed income space, I'm very happy just to be a chicken and sit there at the 2-year Treasury and collect my 4.2%. That's not a bad way to make a living. Do I do that, or do I take some credit risk?
We'd say definitely take some credit risk. So one, right, for taxable investors, especially in higher tax brackets, we'd look to high yield munis. We think there's extra income to pick up there, and you have decent quality. Two, we'd look into not only high yield corporate credit, but bank loans, leverage loans, as well as things like AAA CLOs and non-government agency residential mortgage-backed securities, where you're able to pick up another couple of points of income relative to that 2-year Treasury. Yes, you're taking on credit risk. Yes, you're getting less compensation than you may have historically. But those fundamental trends of a good economy and falling distress, right, improving credit quality in those spaces means you should be able to garner that extra income and do better in 2025.
Rob, one of the most fascinating growth stories of my 35-year Wall Street career has been the growth of private credit. Do you guys try to get exposure to private credit?
For certain investors, we absolutely do. We look at that a couple of ways. One, certainly, right, direct investments for qualified purchasers. But two, we'd even look to things like the insurance-linked securities market or reinsurance, catastrophe bonds, where there's some more limited liquidity, but you're actually getting income and being able to diversify away from the business cycle because it's very much dependent upon the kind of the global catastrophe cycle. And we've seen very good returns over the past year. We're seeing solid returns this year, and it's setting up for probably good returns next year. So we would encourage people to continue to look away from the very traditional high-quality investment-grade elements of the bond market and look for more esoteric opportunities to grab risk.
Rob Hayworth, thank you so much for talking us through all the opportunities out there. U.S. Bank Wealth Management. Have yourself a very great Black Friday and weekend. Meanwhile, coming up, so much more. We're talking about the intersection of influencers, social media, and your purchase decisions. We've got Amber Vance-Box joining the show, co-founder and president of LTK, for her read on e-commerce trends. You ever bought anything off of Instagram?
No, I haven't, but I'm not the demo. So, but there are a lot of people here that we could bring in just walking by the studio that would have great stories, I'm sure. Because it's the thing. It's just so much for buying a 30-second spot on network television. That's not how you get people into the store these days.
No, I mean, when it came to politics, it was all about podcasts. But when it comes to purchasing, it still is all about the social media power, and we're going to be digging into that. Meanwhile, interesting that Meta's on the higher side after reports that Mark Zuckerberg was over in Mar-a-Lago.
Yes, that was very interesting. Didn't Facebook then ban former President Trump?
Yeah.
So
them and as Twitter was from January 2021, and ruffled a few.
What I think, what you hear from a lot of Trump observers, he's very transactional, and you could probably say the same thing for about most business people. They're very transactional, and this is the transaction that makes the most sense for both sides, probably.
And we'll see, of course, whether the viewpoint on TikTok and whether or not the ban might well happen here in the United States or not. That's a key contributor to Meta's path at the moment in terms of a stock price. We've got so much more to debate coming on social media for you. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
All right, I'm Paul Sweeney alongside Caroline Hyde. We are in our Bloomberg Radio studio in New York City. This is a special edition of Bloomberg Markets on Bloomberg TV and radio. It is Black Friday. We have a shortened trading day today. We're trading till 1 p.m. Wall Street time. S&P 500 up 0.6%. The NASDAQ up at about 0.8%. How about that? And the Russell up about 0.5%. Let's look at the yield space here. 10-year Treasury yields coming in just slightly here today. We're down about 4 or 5 basis points. 4.21% on your 10-year. On the commodities front, oil a little bit higher here. WTI crude oil just under $70 a barrel. It's up 1.3%. Gold higher yet again. Why not? And Bitcoin up another 3% here. We're on that $100,000 watch, $98,000 for Bitcoin. So, Caroline, a little bit of gains here today on a Black Friday shortened trading day.
Record highs across a couple of benchmarks, but we'll see a different approach now, a different feel and take to just how buoyant you're feeling this Black Friday, particularly if you're following influencers, because LTK is really all about e-commerce. It's a platform for creators and their businesses. And basically, it shows that creators and influencers are outpacing industry holiday sales, and that holiday retail sales are driven by creators on its platform were 5 times the overall market growth rate last year. Let's bring in LTK's co-founder and president, Amber Vensbox. We're so glad to have you here, Amber, because just put into perspective, someone who perhaps isn't on Instagram as much as I am, for example, and isn't getting fed these posts, how often are people buying their goods via a social media influencer, being influenced?
Right. Well, it's at quite a scale. So this year we expect for people to buy over $5 billion worth of products from LTK creators. For a sense of how frequently this has happened, it's about every second there are 1.5 purchases made, $200 purchased from an LTK creator. That's exclusively online on the LTK platform. We know from many of our partners that about half of the sales that we're driving, especially big box beauty, are actually happening offline in store. So this has become culturally normative. We're seeing that among Gen Z and millennials, a huge uptick in those that actively shop and make purchases through creators. It's 66% among those younger demographics. 56% of the wider population now report shopping from creators, and that's up 64% year over year, according to our LTK study.
It means a lot for your business, means a lot for the influencer, means a lot for advertising spend. I'm really fascinated, Amber, how are you tracking the offline purchases in particular? How is it that you're seeing this conversion and you can go to your partners and say, look at the return that you're getting?
Yes, well, this is a new technology that we've been trialing with a few different partners. And so in this case, this was one of our largest, U.S.-based big box beauty partners. And we've been doing some innovative projects with them to sort of understand the full funnel influence of creators, because it's not just branding and positioning, obviously from the impressions they're getting across social media and the LTK platform itself, but then also down full funnel, so consideration through the actual purchase behavior. And we're really leading the market and being able to report on that for our brands, which is why I think you're seeing all of these dollars rotating from other mediums, whether it's social or search or out of home or linear television, rotating into creator, because we're getting better at quantifying the value that they're really injecting into this retail ecosystem, especially during a holiday season like today.
So, Amber, could you give us a sense of who an LTL creator is? Who's a typical LTL creator on your platform, and what are their economics? That's what fascinates me.
Yeah. So an LTK creator, we've been in business for over 14 years. So some of them started in the blogging days, some of them started in the Pinterest and Instagram days, others in Snap and TikTok. So generationally, there's been, new types of creators over time. These are people who are really multi-hyphenates. They are wonderful at, first of all, creating a community that trusts them and that they're reaching every single day. So it's both entertainment and relationship building. That's why we're able to drive a better ROI for a marketer than think of out of home or linear or the other things that we talked about. Because if you have a relationship with me, let's say that you know that I'm always a contributor on the news. Well, I might know where to get the best, dresses or outfits at the right price to wear on those programs. You're going to trust me more. Maybe I'm telling you which eyelashes are best to flip on for the news. I have that trust with my community because they know me, and so there's no more research needed. They're just going to go ahead and move forward. We can help you, Paul.
So I need all the help I can get. Who's a typical customer here of these creators?
Yes. So they are high earning and they are educated. We see that the LTK shopper typically is making over $100,000 a year. They do have a college education. It's really interesting because while they have an outsized spending power, they actually this year have grown their spending power by 38%, which when you look at just the broader population, theirs has decreased around 7 or 8%. So this is a really differentiated group, but they are buying everything from big box to luxury. They're very much interested in wealth preservation, which is why you see, everything from the $10 lip gloss all the way up to the designer handbag. This is a group of people who are buying across categories, but we've been able to really move markets for some of our big box retailers who want to attract that high earning customer that has not historically been a part of their mix.
Not your demographic per se, as you're saying, you're high earner, you're college educated, you're a little older basically than a college kid or a younger than that. But can you speak to what's happening in Australia and whether or not your clients are seeing this global pushback on advertising and influencers focusing on children, 16 and younger? We've just had the ruling from Australia, unprecedented, that 16-year-olds and younger will not be able to get on Instagram come a year. What does that mean for your clients?
Well, it's exciting to see, candidly, as a parent, because that's something I think about every day. I have 4 children, and what is that influence doing to them, and how do I control it and make it and use it as a tool in a productive way? I hope that we start to see a transition into productivity tools, educational tools. That's why I'd like them spending their time. At LTK, we are an adults-only platform, so while everything that we're doing is very much, in a very positive spirit, in a helpful guide. We're a platform that it doesn't have to deal with a lot of the things that social media really helps to deal with or has to deal with. We have always been adult only, both on the creator side and on the shopper side. So we don't expect an impact specifically to our business. That's not where we're focused. But I think, if you're asking me from a personal perspective, I think that these types of regulations will be really helpful because we've been sitting in the middle of an experiment of what, we'll only just learn in the coming years what happens when you put children in front of a screen for this period of time, or what happens to their social influences. New York Times has wonderful articles about how, that free entertainment, what the cost is of that long term. And historically, it's been thought that having access to technology would benefit the wealthy. And what we've seen is it's actually just really damaged the poor from a childhood perspective. And I've been leaning more in there. And so I'm excited to see more regulation around this topic specifically.
Amber, if I'm a creator or an influencer, which I am neither, why would I go on the LTK platform versus maybe some other platforms out there?
Yeah, well, the LTK platform is the only one that's actually created to help you do your job as a creator. So for so many years, creators were using other platforms, and I joke that I live on a ranch, and so think about you're using a screwdriver when you need a hammer. They've been using sort of rented properties, if you will, to try to get the job done. And over the years, LTK has invested hundreds of millions of dollars to actually build something that's purpose-built for 2 things. One, to retain, nurture, and grow your community, which as a creator, your access to your engaged community is actually that's your entire business. So as social media platforms have sort of abandoned that role in the ecosystem from being a community-based platform, our creators have really needed that. We started investing pretty heavily in that space in 2017, and now today have a really robust platform that is both a content management system and a CRM for our creators. That becomes really important. And of course, we have the monetization built in. Our brands have spent over $3 billion with LTK creators. So to have a tool that's built for you and that has monetization built in means that I get to wake up every day and talk about what I love, whether that's my Thanksgiving tabletop or the snacks I'm interested in or what I'm buying for my children. I'll also say that this platform, we've really invested a lot for the holiday season. So gift guides this year, the functionality is really increased. We've seen twice the number of gift guides created. It's interesting, about 40% of those guides were created in the for her category. But, we're seeing a lot of really gender neutral gifts being the most popular gifts. So everything from Apple AirPods to Uggs, KitchenAid mixers, Stanley tumblers. And then, of course, we're seeing a lot of searches across beauty. Again, back to searching online, going in store to buy. And then one that stood out to me was searches for Luxe pajamas are up 300% this year. So that must be the holiday gift of the season.
All right, Amber, thank you so much for joining us. LTK co-founder and president Amber Venz-Box, thank you very much. Coming up, big budget movie makers are hoping for a joyous holiday season at the box office. We'll take a look at the expectations for movie theaters and marquee holiday entertainment in the weeks ahead. When we come back, it is an important part of the season for after the summer. It's this holiday season. That's big for the theaters and the studios. We'll have that coming up. This is Bloomberg. Good morning.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
The top Names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything.
All right, I'm Paul Sweeney in New York City with, we are here with Caroline Hyde. We are in our New York radio studio. We're doing a special edition of Bloomberg Markets on Bloomberg Television and radio. How cool is that? A little bit of green on the screen here today. The S&P is up about 0.6%. The NASDAQ up 150 points. That'll get you an 0.8% gain in the NASDAQ. Yields coming in just slightly. Got the 10-year Treasury yield off about 5 basis points. We're at 4.2% on the commodities front. WTI crude oil up just slightly, just above $69 per barrel. Gold higher yet again. That is the trade, folks. Thank you, Dennis Gartman. And Bitcoin, that's up 3.3%, 98,300. So some movement there in some of the risky assets in the market. Let's see where the action is under the hood. We can do that with Isabel Lee, because she's in our Bloomberg studio. What do you got for us?
Tesla up 2% for the year. It's up 30% for the month, also 30%. We have Wedbush, which is, as we know, kind of a really bullish shop, saying that Tesla is likely to find and unlock a $1 trillion worth of AI and autonomous opportunity. And of course, this is helped by the incoming Trump administration aggressively doing a heads down on everything AI and autonomous path, and Tesla's march to $2 trillion is really now looking clear.
I mean, many people are, the jury is out as to whether Trump will be pro-generative AI, particularly around regulation, or not. I mean, yes, there's going to be innovation and rolled bare, according to the likes of Verswamy. But then you're also hearing that, you know, Elon Musk himself is worried about AI, generative AI, the regulation around it, doesn't want just all-out enabling. And so we will see that interesting nuance as to whether or not we will see suddenly robo-taxis allowed everywhere. And more to the point, is robo-taxi technology ready and fit and able for use within Tesla at the moment? Many would question whether he could start putting his fleet on the roads from a robo-taxi perspective.
That's a fair point, but two things could be true. He could be worried about AI, but still power through and develop all AI. And we have Wedbush saying that Tesla isn't just a car maker, it's a leading disruptive tech global company. Right. So there is that.
Now, the anti-Dan Ives call would be, it's now apparent that making cars is a crappy business. It's a low single-digit multiple business. So you better, Elon, if you want to keep your multiple, do a head fake and talk about AI and all those types of things, and to fake out your investors yet again. That's the bear case. But
particularly if they take away some of the subsidies, the $7,500 credit, suddenly many people are saying you're going to have to cut the prices of your cars because they're still pretty expensive to many.
But if you're a bull on Tesla, you're a bull on Elon Musk, and that has been a great bet for a long time. And if do you want to bet against them on AI? Do you want to bet against them on the robo-taxis? The bulls will say, like Dan Ives will say, good luck
you've
with
been
that.
wrong for a long time.
Exactly.
Tesla is up 30% this month. One of the best performers so far. But who else has been the best performers, Isabel?
Well, given that it's December next year, let's have a look back for November. Biggest gainers for the month is Paycom Software. The company reported good earnings last week, and Mizuho updated its price target. Among the big gainers are Warner Brothers, Tesla, and United Airlines. I actually want to bring up United Airlines because it reported good earnings last quarter again, but it's really outperforming its peers. It's up 133% year to date. It's beating Delta. It's beating Alaska. And it's obviously because of a slew of many reasons. It's benefiting from tailwinds like corporate international travel momentum, its frequent flyer program, oil prices, and just really a lot of Wall Street estimates. I did a quick search on the terminal for headlines of United, and I saw at least 5 upgrades in price targets. So.
I'm captive to Newark Airport, so that means I've been a Continental, now United customer forever. Got a gajillion and 1 miles on that thing. Wow. I don't know. They're all the same to me. I mean, of the major airlines, the Deltas, the Americans, they're all the same. But they do a good job. They kind of get me where I need to go.
That's true. I also
flown over a couple million miles with them, so I'm good.
That's amazing.
A couple of million.
Well, lonely investment banker going to Topeka on a Thursday in January. That's not so fun, but that's what we do back in the day. So yeah, I'm spending all those miles now. So, but I mean, it's
nice, good.
Airline business is such a brutal business. I can't imagine operating because you got fuel, you got the planes, it's just the weather, tough business.
But I think we can all agree that airline travel is just worse now compared to before in general, unless maybe you're first class.
Yeah, well, certain employers allow us to do that. So, all right, anything else for us?
The losers, the laggards for the month, Supermicro down 33%, Moderna, Advanced Micro, and Estée Lauder. Supermicro has had a really rough month. It struggled to stay listed in the NASDAQ. It changed its auditor and all that. But it's still there, and it has a bright spot, which is BDO USA. At least it got an auditor after.
All right, very good. Yeah, the little things in life.
Might get it 10K.
I have an auditor, yeah. Let's get some financial statements that we can rely on. All right, Isabella Lee, thank you so much. We appreciate that. Isabella Lee giving us the lowdown on some of the movers in the market right here. I haven't seen Gladiator 2. I haven't seen Wicked, but I got to do that maybe over the weekend. But that's been a positive story here for the U.S. box office. Daniel Lauria joins us, editorial director at the Box Office Company. Daniel, talk to us about kind of the state of North American box office here. Are people going to the movies?
Oh, it's a hot streak, Paul. We've seen great recovery so far this year. Remember, we entered the year expecting a down season year over year, 24 to 23. But really, since June, it's been a hot streak. We're expecting to finish the year close to even to 23 after beginning the year expecting a 10% slide. So it's been a really, really big recovery thanks to films like this.
I mean, Disney just knocking it out the park at the moment. They've had winning formula after winning formula. How big a deal is Moana 2 going to be?
I think it's going to be huge. We just posted the largest Thanksgiving day ever for a title. Moana 2 did that yesterday. Over $80 million in box office for the first 2 days in release for Moana 2. We're expecting maybe $200 million plus from that title this weekend. To give you an idea, guys, this might be the highest earning Thanksgiving weekend of all time.
And is that because they've got the formula right of there's something for everyone as well? When one of my producers, she was off to go and see, well, not to typecast, but she was going to go and see Wicked while her husband was going to go and see Gladiator 2. There's something for everyone. And then there's the family formula with Moana 2. So we're all satiated.
Caroline, I think you nailed it right there. We have something there for every type of audience at the movies this weekend. The Gladiator 2 opening weekend audience was 61% male. For Wicked, 72% female. And obviously family audiences are coming out to support Moana 2 en masse this weekend. Those three movies occupy 75% of all showtimes in North America, according to our data at the Box Office Company. That's a massive response from theaters to the overwhelming demand from audiences to watch these movies in theaters.
So, Daniel, give us a sense of maybe how the Hollywood movie-making moguls out in L.A., how are they thinking about the theater release window versus the streaming and all that kind of stuff today versus pre-pandemic? Is it still what it used to be, or is it a different world?
It's different from 2019, but which industry isn't, right? Yep. The big lesson, I think, that the entire industry in Hollywood has learned is the overwhelming role that a theatrical release has in promoting your title downstream. So streaming is still very important, but that theatrical performance is crucial. Let's take Moana 2, for example. A year ago today, that was supposed to be a Disney Plus animated series just for streaming. Today, this is a $1 billion plus global box office hit for Disney. Disney now with two huge animated movies, one earlier this year, Inside Out 2, this one, Moana 2, and then you have other titles like Deadpool and Wolverine from over the summer, and in December, Mufasa, that Lion King prequel. You have a lot of energy from Disney to go big on theatrical, and we see the box office numbers to back that up.
Hey, Dan, I listened to some of the conference calls from some of the big media companies, the Disneys, the Warner Brothers. They're kind of pointing us to 2025 as a really big theatrical release year, you know, due in large part to some of the writers and actor strikes that push some production out. Talk to us about next year.
Paul, I think you're absolutely right on that. If we look at the last 4 years in production, Hollywood hasn't had an uninterrupted year in their production capabilities since 2019. You had the pandemic in 20 and the strikes last year. 2024 is the first full year of production in Hollywood since 2019. So 25 is going to be a huge bounce back for the theatrical industry. We're right now forecasting between $9.5 and $10 billion in box office in 25. And in 26, we have a ceiling of $11 billion, that benchmark that this industry hit in the latter half of the 2010s.
What is spending like when you're actually going to the theater?
I'm sorry, what is it spending like?
Yeah, are people like embracing it wholeheartedly? How much of margin is accrued to those that are running the movies as well as making them?
I think you're seeing a lot more embrace from movie theaters right now in reinvesting back in their theaters to make sure that that experience is as perfect as possible for the audiences. Let's face it, the technology we have at home is great. So the theatrical experience has really invested a lot in making that experience either inside the auditorium, in advancements in sight and sound, or in the lobbies with alcoholic beverages or expanded menus, in making that more of that experience. And I think audiences are responding to that. You listen to those conference calls that Paul was saying a second ago on the movie theater side, you're seeing huge margins on the spending side on food and beverage. That's been a big uptick since the pandemic. And formats like premium format, that means our friends over at IMAX or at Dolby or at or other of those companies with a higher ticket price, consumers are looking for that to have the best possible experience at the movies.
The thing is, for a Gladiator 2 or for a Wicked, these movies in particular cost a lot to make. And I'm interested as to the marketing spend that's gone with Wicked or the sheer technology effort that was needed with a Gladiator 2. Are they making that money back and then some? How much are they managing to crack the code that the movie that they spend a lot on is the one that they bring in a lot of money on?
Carolyn, what you just said right now, I think, is a big reason why the studios are highlighting and emphasizing a theatrical release. The more release windows you have in different formats, the more of a possibility you have to break even and make more money over the lifetime of a film. If you go to streaming too early, or if you only did streaming, you only have one revenue cycle there, one small window to get there. With a theatrical release, you could have 3 months of success at the box office, and from there have that amplify your marketing when it goes into streaming to have that second dip in the revenues. So having a long life cycle for films is crucial, and that's why I think a lot of movies and a lot of studios have gone back to this windowing of theatrical first and streaming second to make sure they can hit the numbers they need for their shareholders.
Daniel, talk to us about China. Before the pandemic, China was rivaling North America in terms of total box office. It was really a gold mine for Hollywood. Is that still the case?
You know, I don't think it has as much of a role as it did in the pre-pandemic era. Obviously, the pandemic raised a lot of question marks on who was going to be the box office king. But really, from the studios, what we've seen is less of an emphasis to make sure that they lock down that Chinese release. It's just such a gamble, Paul. You don't know what you're going to get from a release in that market. If you get it, it's great. A movie like the third installment of the Venom series is doing fantastically in China right now, but it's far from a guarantee. I think studios agree that having a strong domestic release and a reliable turnout from overseas audiences in markets in Europe, Latin America, and in other markets in Asia, that's still the winning formula for most movies.
What about AI and whether it will be adopted more next year?
Huge talking point, right? I think that's still up in the air. There's a lot of things that we need to figure out and what that means for actors, what that means in labor relations. A big part of the strikes last year were around these questions. Like in many industries, AI has a lot of potential. I'm not sure it's a reality just yet.
Well, I have so much more to debate on all of that. We thank you so much for joining us. Daniel Laurier, Senior Vice President of Content Strategy and Editorial Director at the Box Office Company, making us all want to go out and watch some movies. But there is a movie going on across the water in France in real time, and it's a real political saga and drama, take two. But it's real life, unfortunately, for many.
Unfortunately, yeah, and you see that in the French bond yields surging, and I saw the Brie Feta spread, the spread between French bonds and Greek bonds, that's when you know it's getting bad, when people are quoting the Brie Feta spread in French and Greek bonds.
That takes you back to the sovereign debt crisis,
Yes,
doesn't it? Blimey. We'll have so much more across French assets and indeed what Marine Le Pen is currently threatening to the Prime Minister. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
All right, Caroline Hyde and Paul Sweeney, we are live here in our Bloomberg radio studio in Midtown Manhattan. This is a special edition of Bloomberg Markets on Bloomberg TV and radio. That's what we call simulcasting. All right, let's talk global trade here. Global trade is facing a potential rewiring as President-elect Donald Trump prepares to re-enter the White House. DHL Group CEO Tobias Meyer spoke to Bloomberg about how he sees the potential upsides and downsides of that rewiring.
Well, definitely. I mean, it's a big topic. I was in South America just 2 weeks ago for an entire week, in Mexico, in Brazil, in Colombia as well. And especially the Mexican economy being so closely tied to the U.S., it's a big topic what will happen. Also amongst our customers, we have supply chains there being closely integrated, a lot of parts coming from Mexico into plants in the U.S. as well. Yep. So there's concern around that. But also on, I think, the Pacific, the China-U.S. trade being quite a strong element of that being B2C as well. So it's discussion about de minimis again. The transatlantic being more about industrials like automotive.
Is there any evidence that people are front-running the tariffs? Are you seeing any stock build coming through, maybe in the States?
Hard to say, but there is good volume in the last weeks. We see that in ocean freight, we see that in air freight. The year has been quite volatile. We had very strong exports out of China for many weeks, on the ocean freight side especially, so strong growth there. But it has been volatile, so it's hard to call out whether there's really a strong element of that now.
You're based in Europe. When we're talking about trade under Donald Trump, how do you think that Europe's going to retaliate? I was going to say negotiate. What are you planning for?
Well, that's a good question. I think 2025 is a year where the scenarios are unusually wide apart. You could definitely see a good scenario where indications out of the U.S., continued investments along with IRA, for instance, some tax reliefs, elections in Europe that lead to stable governments, that could influence confidence quite positively. But on the other hand, there is the scenario where support to Ukraine might not continue. that then weighing on confidence in Europe and tariffs coming into play. The European automotive industry is already in quite a weak position. So seeing tariffs on top of that would make people quite nervous. So the range of scenarios is quite wide.
DHL Group CEO there, Tobias Mayer, on, well, the breadth of outcomes and geopolitics affecting his business. Let's just stick with geopolitics and perhaps a lack of strength within certain governments. Marine Le Pen's national rally is demanding further changes to the French government's 2025 budget bill. That's after Prime Minister Michel Barnier dropped plans to raise taxes on electricity. It was a key concession, basically. Alan Katz, Bloomberg's Paris bureau chief, is ready, standing by, and boy, this saga continues to unfold. The ultimatum is do it by Monday.
I mean, as you say, it's really a saga, and the question is it going to be a happy or a disastrous ending, really, for it? As you point out, Marine Le Pen has made a whole series of demands. Michel Barnier definitely gave in to at least one of them yesterday when he said he was not going to raise the taxes on electricity. She then came back and said there's a series of other demands, things you have to meet, largely which would put money in the pockets of sort of working class and middle class people in France. The question would be, of course, if Barnier were to do that, how would you fund it? Right now, we're still at that sort of standoff point. Right? It's only Friday evening in Paris. We have until Monday. People work over the weekend when it comes to politics, and so I would expect there to be likely more movement over the weekend. People showing up on news shows and talking about what they might or might not do. And so I think this will really go down to the wire, because in politics it generally does, and no one really has an incentive to change path or sort of swerve in this game of chicken between Marine Le Pen and Michel Barnier until we get to the last minute. And hopefully they won't actually crash, but you never know.
You never know. And Alan, I mean, this headline from Bloomberg tells you all you need to know is looking at the bond market. French yields close in on Italy with safe market image in ruins. Boy, the financial markets obviously signaling that they're concerned here. At the end of the day, is there incentive for these two sides to come together and get something done, or could a worst-case scenario actually unfold on Monday?
So it's a good question. So two things. One is it's funny because French Prime Minister Michel Barnier, I would say, is a little bit excessive in his terminology, just like we might have been actually when we said, the confidence in ruins on that in the headline on that particular story. He said earlier today that France can no longer borrow at reasonable rates. But if you actually look at French bond yields right now, they're roughly 2.85% at the moment. That's about the average of what they've been all year long. And in fact, rates were down today. They were down yesterday. It's not to do with France, really. It's the larger sort of ECB cutting rates, lowering rates in Europe overall trend. But France is not really out of trend. And so the question becomes, so yes, it is closing on in Italy. And yes, I heard you with the Brie versus Feta comparison earlier. It's true that French and Greek yields are about the same now. But that's because Greece has done very well. Yeah. And overall, it's pretty inexpensive to borrow in France. And so the question really is France ready to blow up its 2025 budget? It would knock out the government. It would knock out the budget. It would put France really in a pretty chaotic situation when, in fact, bond yields are not very high. Their borrowing rates are not super high. And so it would really be quite a dramatic decision to blow it all up. Now, that said, politics and economics don't always, or in finance in particular, don't always go along together. And the decision-making is not always, one's not always based on the other. So, I mean, I'm with you, and I certainly agree. It seems pretty unreasonable to blow it all up, but that doesn't mean it won't happen. Yep. And France, just like any other country, right, the politics sometimes really take control.
Alan, thank you so much for joining us. Really appreciate your reporting. Alan Katz, Paris Bureau Chief for Bloomberg News. Well, let's look ahead to next week. Markets are awaiting some key economic data. ECO Go is the function to get all that economic stuff, including manufacturing PMI and the November jobs report. Let's discuss what Bloomberg's just met, and she's back in the studio. Can't get rid of you. Dude, you're my co-host for 2 hours this morning. And then
I know.
All this reporting throughout the day. What are you looking forward to next week?
So there's so many different things. You're hinting at some of the eco data coming up. Of course, we still have Cyber Monday that y'all have been talking about all morning, in addition to Black Friday. So you have that. It's also the kickoff to the final trading month of the year after the S&P 500 on pace for its best month of the year in November. And then you also have, you were talking about some of the eco data. It's more of a labor market kind of heavy week because we'll have the monthly employment report coming out next Friday. You also have the JOLTS report coming too that Fed officials like Powell keep a close eye on. But actually, Fed Chair Jerome Powell is going to be speaking at the New York Times. They have their deal book summit that's going to be on next Wednesday. So this is actually the last week that we'll get Fed officials speaking before the blackout week begins, before they have that December 18th Fed decision. So you do have that. And then you can't forget earnings. So even though we've had roughly 97% of the S&P 500 by market cap report, you still have Salesforce as well as more retailers like the dollar stores. So obviously Dollar General, Dollar Tree coming out too next week. So we still have a lot of things on tap.
Can you just give the Jess meant an assessment of earnings? Because I've only been keeping an eye on the tech earnings, and there, if your forecast missed, then you were beaten up, no matter really how well you did in the previous quarter. But en masse, have earnings proved out to be as good as the stock market might lead you to believe?
So it's a great point, because this time around, coming into third quarter reporting season, the bar was lowered, which we tend to see more often than not. We didn't see that, though, during the second quarter, so the bar was a lot higher. But this time around, so the preseason estimates for the S&P 500 were 4.2%. Right now, they're coming in with 97% of the market cap reporting around 9%. So that's double the growth estimates of what sell-side analysts in aggregate were looking at. And people can go to the BI function for the equities side. Gina Martin-Adams and her team compiles that data there. So overall, you're seeing better than expected growth. And then we're still seeing that continuation where, because I know, Caroline, you focus so much on the tech, and people keep talking about kind of slowing estimates, especially when you're looking at the year-over-year periods, because especially in 2022, we were in a bear market and the earnings outlook wasn't as strong. So the comps a year ago were so dramatic for those tech companies compared to now. So it's not necessarily a bad thing when I'm talking to portfolio managers or even analysts about what we're seeing with tech earnings growth. It's more, you're still seeing the broadening out, so you're seeing more of the sectors pick up pace.
Jess, thank you so much for that. Appreciate it. Jess Menton, she covers all the equities for Bloomberg News. That about does it for me and you, right? We're done now?
A 3-hour dance comes to an end. Your 5-hour marathon.
It's all good. It's all good. I mean, I tell you, on a shortened trading day, we still got some gains here today. We'll take it. You know,
some record highs.
Exactly. I mean,
lining out on.
I mean, we've been working hard. So has some folks in the market. The S&P up 0.6%. The Dow, I'm going to call it up 300 points. That's 0.6%. The Nasdaq doing a little bit better, up 0.8%. So again, some positive moves there in the equity markets here. Yields coming